Hello and welcome to CoinDesk Live from Ripple Swell in New York City. I'm Jen Sanasi.
And I'm Andy Baer.
We are in New York, the epicenter of global finance, for Ripple's flagship invite-only event, bringing together over 700 of the most influential voices in crypto, traditional finance, and policy. Leaders from Wall Street giants like NASDAQ, BlackRock, and JP Morgan are all here to tackle the future of finance, focusing on everything from stablecoin payments and crypto regulation to the institutional adoption of digital assets. Andy, before we get into it, I got to say, I heard the XRP Army was waiting on YouTube for this stream. So hello to the XRP Army.
Good morning, XRP Army.
I hope you enjoy the stream. We're going to bring you everything you need to know from the event. Before we get into it, though, Andy, we got to talk about markets this morning. Yep. They're looking a little bit choppier than we're used to.
Yes, the chop is good, but hopefully the swell will settle things down, right? The markets have been tender for the last couple of weeks. There's continued hangover from the October 10th deleveraging event. There's a lot of very visible sort of long-time holders of Bitcoin that have been sort of reallocating into other assets, and that kind of spooks the market. Bitcoin's managed to hold on to 100,000, which is obviously a key, very psychological kind of champagne support level. Other assets, I think, are moving in proportion. CoinDesk 20 index is around 3,200, 3,300. We're still a lot better than where we were in the spring, but we've lost a lot of the power that the market had since late August.
Usually at this time of the year, we expect the markets to be doing better than they are doing. What are some of the factors that are contributing to
we're calling it a sober October,
yeah.
right? Sober October this year. Well, it's just a lot of the things that have been in place other Octobers aren't here, and a lot of the cycles. We're in a different marketplace. Bitcoin is way more widely adopted than it was 2 years ago. Volatility is lower. Holders are lower. The marketplace liquidity has moved into a lot of different places. So it gets harder and harder to compare this year's market with the previous year's market. We enjoyed a very powerful, broad, ether-led rally in Q2 and Q3 with news about stablecoins, which of course helps the topics that we'll be talking about today. And a lot of the other tokens, the growthier tokens, have met or beaten Bitcoin's performance up until that late August sort of highs. But the market's tender now, and we just have to kind of let it happen. Looks like equities are finally taking a breather as well. So we might be in for a little chop, as you said, but hopefully we can surf the swell.
Regardless of what's going on in the markets, industry leaders from around the world are here at Ripple Swell. And it really speaks to something you and I have talked a lot about, the maturation of this industry. I'm really looking forward to some of the folks we're going to have on the desk later today. But before we head on over to the stage to hear opening remarks, what are you looking forward to?
Well, I'm looking out at this beautiful view, which unfortunately viewers can't see. But we're at Hudson Yards, which really feels like the new New York, and feeling, celebrating the new asset class, the new money, the new payments, the new trading systems. It's kind of reflective. It's shiny. It's clean. It's built for purpose, right? And so a lot of what will be talked about today is that integration of crypto and traditional. It looks like we are getting to the point where there is better and better consensus that this is the way forward. So we want to hear some news. We want to enjoy the progress that we've made since Election Day last year. Today, of course, Election Day in 2025. And, be prepared for some surprises.
Andy, you and I were talking about this before the stream, but a year ago, I think we wouldn't even fathom that we would be having the types of conversations we're having here today. Of course, on the back of extraordinary progress on regulation in the United States. We're going to hear more about that, but we've come so far in such little time. It feels like we had a lot of push and pull up until that pivotal moment for regulation earlier this year.
I think my favorite part about that is seeing our primary regulators, the CFTC and the SEC, working together. Actually, it looks like, I don't want to say crossbreeding, but at least having talent moving over from one regulator to the other. The degree and the quality of dialogue that our partners have had with the regulators has been sensational. That's been fantastic. Usually you have to have a giant financial crisis right behind you to see this much regulatory and legislative progress in finance. I'm looking behind us. I don't see anything that tragic, but we've had a lot of progress this year, and it's a really special time for finance.
one of the big themes that's going to come out of the conversations that we're having here today is really building this bridge between TradFi and DeFi. A lot of the institutions, names that everyone who's watching this broadcast will recognize, aren't only investing in digital assets, but they're building, they're staking, they're becoming really active participants in the communities and ecosystems, which I think shows an immense amount of growth and shows that they really were waiting for this regulatory catalyst to dive in and start experimenting.
I couldn't agree more. We just passed the anniversary of the original Bitcoin paper, which of course was about hard money and payments. And if anything, 2025 has been the year of payments. How are we going to make payments faster and more flexible and use different underlying bits to support those things? How are we going to abstract away a lot of the complexity of different, say, stable coins on different blockchains or different sources? So much progress is being made on that on the technology side. The regulatory framework is supporting that, and you can see how fast things move when the gates get opened.
You know, I sat down yesterday in New York with Mike Novogratz, and we spoke a little bit about the communities that are forming around different cryptocurrencies, different cryptocurrency ecosystems. And I have to say, the XRP Army is probably one of the strongest and most passionate communities. I would love to hear your perspective, because you came from a TradFi background.
Yeah.
This isn't really something that we were used to seeing with equities previously.
No, a lot of us in traditional finance, I was in equities and derivatives, and I thought we had a pretty broad perspective on how markets worked, but it turns out the changing and the integration of this asset class into finance, there are futures people, there are money people, banking people, payments people, technology people. What is really impressive is how many different disciplines within finance are coming together to make this technology happen. Crypto loves to trade. It loves to trade derivatives. 3/4 of all crypto trading volume is in derivatives now. So there's no kind of hesitation about whether you're trading something in a spot or a synthetic form. So that's kind of interesting, and that's very native to the way I grew up. But the whole payments thing and the abstraction and bringing different experiences to consumers, handling things cross-border in a more seamless way, these were kind of notions that we threw around when we were introducing people to crypto 2 years ago, but now they're actually being built, and I think we're going to hear a lot about them over the next couple of days.
You know what else we're going to hear about? Acquisitions.
Yes.
I think there are 4 big acquisitions that we're going to talk about that have happened within the Ripple ecosystem. You and I talked a little bit about acquisitions on our show. As the industry matures, I think we agree, we're probably going to see more and more acquisitions, TradFi companies acquiring crypto companies, vice versa. Is this kind of like the beginning of the melding of CeFi and DeFi?
Why not, right?
Yeah.
I think when you have specialty finance companies and a larger company wants to sort of get into that business and realizes it's going to take them 18 to 24 months to build it, or they can have it operational in 2 months, I think they're going to choose that. Now, these acquisitions might not have been as cheap as they might have been a couple of years ago, but that slow money, as we were writing in our vibe check a couple of weeks ago, the slow money has kept progressing, even as the fast money has become a little bit more hesitant to enter the market. So I think we'll continue to see it, probably surprise after surprise after surprise, and most of those, will be helpless.
Looking forward to seeing who from the TradFi institutions are like secret degens.
Right.
That usually comes out in broadcasts like this. And I know we're going to have Sandy Call from Franklin Templeton on the desk. And I like to call her a secret degen. Although it's not so secret really anymore,
No, Sandy's not so secret. But, about 2/3 into every meeting that we have with our partners, what are you guys doing at home? And all of a sudden, the rest of the meeting is like, oh, I have this wallet, I'm into this one, I was in this one first. So, the enthusiasm, I think, the living room enthusiasm can now come into the corporate boardrooms. And there's a lot of talent and knowledge, and that just makes education a little bit easier. That abstraction to the consumer level for things like trading and for borrowing and lending and for payments, that's going to be the hard part. The reconciliation of how people trade in brokerage accounts and who's going to regulate spot crypto trading and how that's going to reach most people who want to do this to help move people from trading out of wallets into accounts, or at least have them working in parallel. Those are the really heavy things that have, changing the behavior of a lot of people. That's the big lift ahead of us. But it looks like the foundations, just like the foundations here in Hudson Yards that bring up these beautiful new shiny built for purpose buildings, is going to happen in our asset class.
Andy, I think you you love architecture. Every
I do.
time we're together, you comment on the buildings. You tell the audience about the beautiful buildings that we're in, whether they're old or new. We've got to start at Andy's architecture segment
Well,
or something.
first of all, you got to start with a river view, which we have, and
We
then
do have a river view.
see some motion there, and then see the people down there, the train tracks, and everything. It's fabulous. This is a city built within a city, and it's really fitting that this event is on the stage here.
All right, we are going to take a quick break. When we come back, more from Ripple Swell.
I'm definitely hurt, but also excited that I was overlooked for years before being on here, but now here I am. Hi, I'm Brad Garlinghouse. This is Crypto in 1 minute. 1 minute on why are people excited about crypto ETFs. I think there's two main factors going on here. One is, for the longest time, institutional investors primarily trading on Wall Street, really haven't been able to access crypto directly. Their options were to either self-custody, onboard with an exchange, and some people don't like centralized exchanges for a whole host of reasons. So this was really the first time you had institutions be able to go on Wall Street and trade directly in crypto. This is an unlock for a couple reasons. For capital that couldn't come in, whether it's an endowment, whether it's a pension fund, even mutual funds that didn't or couldn't access crypto, now they can. The second thing is, it really is institutionalizing the entire industry of crypto. I think it should be no surprise that the Bitcoin ETF was the fastest ETF ever to get to $1 billion in assets. I think it passed 10 billion in assets faster than anyone as well. And today is, I think, will eventually close in on the gold ETF, and that's in 1 minute.
Hello and welcome back to CoinDesk Live from Ripple Swell. Our next guest is the co-CEO of an exchange that just reported record-breaking Q3 profits, up 114% year on year. Kraken co-CEO David Ripley joins us now. Hello.
Hello, how you doing?
I'm doing well. How are you doing?
Great.
Well, congratulations on those Q3 numbers.
Indeed, yep.
All right, before we get into that, talk to us about why it's important for an exchange like Kraken to have a presence at an event like this.
Well, you know, we've actually been partnered with Ripple in some ways for well over a decade. We were one of the first exchanges out there to ever go multi-token and therefore list XRP back in 2013, so quite some time. We're also one of the first exchanges to list Ripple USD as well, new stable coin back in the spring. So look, we take kind of an open approach to the ecosystem, partner with all different blockchains, banks and payment processors on down the line. And so for me personally, I like to do the same when I'm attending events and conferences, kind of go to developer conferences, investor conferences, blockchains such as this one, and kind of spread it around.
So investor behavior is changing, right? And retail has a lot of different places to trade things. And I remember from last year, you're kind of trying to go the other way and bring tokenized securities to folks to trade. So how do you keep your finger on the pulse of your retail traders who are, keeping liquidity in the exchanges and keeping that activity going?
Well, I think that's one of the most significant things that's happening right now, and certainly what Kraken is leaning into, right? And so when we look at our population we serve kind of individual retail traders, individual professional traders, institutions as well. Maybe starting with the kind of the retail and the individual pro trader group, they want to trade assets. They want to trade a number of different asset classes. And so we made moves to move into TradFi, actually. And so now we offer a full suite of futures trading. We acquired the largest retail futures broker in the U.S., NinjaTrader, pure play futures broker. So now we trade, offer trading in futures for indices, commodities, FX, and the like. Same with equities. And now, so we also are a registered broker dealer, offer trading equities. The next step for that is kind of like bringing the two together in a really interesting way, which would be tokenized equities, which is probably the most exciting thing we have going on right now.
So big question. I'm glad I get to ask you this directly. I grew up in the equities world and the derivatives world, but on the securities side, and people have brokerage accounts. Not a lot of retail people experience the futures market. Except in crypto, perps are huge, right? So offshore, people are very used to this kind of Delta One futures experience.
Yep.
In the regulated world in the United States, and this is a challenge for the CFTC, not a lot of people have futures accounts and understand using FCMs. Do you think that behavior is going to change? Like, how is retail going to express their derivatives positions or their views on crypto exchanges? Is it going to be short-term options, or do you really think they'll start to lean into futures and that will kind of, really kind of change their behavior?
Well, I think in some ways, maybe not, honestly. So we have, we kind of think about it from our different populations of customers. We divide it in those three groups I mentioned before: consumer, individual, pro traders, institutions. I think that individual pro trader segment where Kraken is particularly strong.
Yeah,
is where
they'll
see,
trade futures all day.
Exactly.
Yeah.
And I think that's kind of the population of the acquisition we made, Ninja Trader, another peer in the traditional financial services space like Interactive Brokers. That group, of course, familiar with derivatives, they want leverage. They're interested in trading the action that they get on those
They
markets.
can fill out the forms.
I think when you get to, exactly, I think when you get to the consumer population who, has adopted crypto to some extent, and will continue to do so, that's a much bigger population, you probably won't see quite as much interest and activity in derivatives as you do there. It won't be zero. I mean, I think equity options is probably where you see more of the activity from kind of like a more pure consumer retail trader in the traditional financial services space. We'll see some of that in crypto, but it's not going to be, I don't think it'll be a drastic shift. I don't think crypto's kind of changing the game with regard to spot and derivatives. I think that's going to kind of be consistent across the two spaces.
Right. That makes sense. And then so retail, I think you still want them to trade across your kind of really wide population of names, some of which they won't be able to access in things like ETFs and funds and stuff like that.
Yeah, of course. I mean, I think the retail population for sure. I mean, probably you would look at that group, the consumer group, historically pre-crypto, largely trading equities, maybe doing a lot of, ETFs, mutual funds, all that type of thing.
Right.
Crypto has a right to be part of that group for sure, and is in fact, I mean, we look at the younger populations, substantial number of them are now adopting, even just Bitcoin, Ethereum, and so forth as part of their portfolio.
Bitcoin volatility has plummeted, and this wasn't hard to predict, right? Because you have a bigger user base, you have a lot of Bitcoin locked up supporting ETFs and in DATs and things like that. And other assets, I guess, Ether volatility is kind of where Bitcoin volatility might have been 18 months, 2 years ago. In traditional finance, volatility is bad and diversification is good. In crypto, it's sort of the other way around. How do you expect trader behavior or your customer behavior to change if volatility continues to compress?
Well, I think that's inevitably the case. And what we've frankly, going back a decade plus ago, what we've hoped for and what we expected to happen.
Be careful
as
what you
said.
hope for, right?
Yeah, no, yeah, for sure.
Right.
What we expected to happen. We expected more volume, more activity, more diversification, institutions to come in, more liquidity, and that's going to bring volatility down over time. Also, just additional use cases for Bitcoin, Ethereum, and so forth, whether it be payments, other different parts of DeFi smart contracts also are going to bring volatility down. Now, in crypto, of course, we have a long tail of different other names out there.
Something for everyone, right? Yeah.
And there's plenty of tokens without a shortage of volatility, that's for sure. And so that's going to continue. So, but I think it's a beautiful thing that we now have, volatility continually coming down. It's still, frankly, fairly high relative to some, other assets out there, like, for example, large fiat domestic currencies, which tend to be, reasonably more stable. So I think there's still, and which is why we, of course, have stable coins. But I think over time, the trend will continue. Over the coming years, it'll just kind of continue to, decline in its level of volatility.
I've got one more for you. Sorry, Jen.
That's okay.
I think part of, I've been in a lot of different countries helping to promote a lot of our products and with our partners. And the stablecoin narrative being top of fold in the news has, I think, generated a lot more comfort for people.
Yep.
Across your user base, your users in their Kraken accounts can keep their money in dollars or presumably in stablecoins. Have you noticed an enhanced comfort level, a shift that people are happier keeping their money, kind of more in a more permanent way in stablecoins?
Well, I think for sure. I mean, when you look at the individuals in the crypto space, first, I mean, stablecoins are just a far superior payment mechanism than anything that exists in traditional financial services. Far superior. we, of course, back in the day, thought like, hey, well, how are we going to get Bitcoin and or stable coins to be used for payments? You have this huge catch-22 where in order for them to be used by payments, it takes two. It takes a sender and a receiver, and so you need to build a network. And the problem is in order for everyone to kind of like adopt stable coins or Bitcoin all at once to use them as payments, it just isn't going to happen. But what we saw happen is that many people adopted Bitcoin for whatever purposes. A big one, the inflation hedge, the investment on future gain and adoption of the network, all that type of thing. That put Bitcoin and stable coins in many people's hands. Stable coins then kind of arose as this settlement currency across all of the centralized and decentralized exchanges. Therefore, we have it there. If you look at Kraken or any other company in the space that's already in crypto, holds stable coins, holds Bitcoin, we would never think to actually send US dollars using a wire or a SWIFT. We just don't. If the individual or the business on the other side has stable coins, that's what we use. And I think once now we got over that hump, everyone who is already integrated with crypto or stable coins, has them on their books, knows how to do the accounting, all those type of things, which is somewhat of a lift, they're going to use stable coins. And so I think we're getting to that point now.
All right, let's bring this interview full circle. We mentioned those record-breaking Q3 numbers at the top of the interview, 114% year over year, 50% quarter over quarter. Talk to us about what drove this growth. Is it institutional, retail, a mix of both?
Yeah, I wish I had like a simple, fun answer for you on this. It's really across segments, and frankly, it's across all of our products. We have a number of different products. We started as an exchange a decade ago. Now we're a full financial services technology firm. We have, of course, the exchange. We have derivatives. We have asset-based products, lending, margin trading, things like staking, of course, for crypto. All these various different products kind of grew across all the different product areas as well. I think one thing that's probably unique for Kraken is we really actually didn't do any marketing as a company historically. In the 2021 bull market, we probably spent about $5 million in total on marketing. I mean, obviously now we're a multi-billion-dollar company, right? That's changed. We're definitely investing in marketing now, and our growth engine is really, cranking. And so for all of these all these products that we've built, all these customer services that we serve, we're really starting to see dividends there. When we acquire a customer, we measure what's called payback, and we see those customers pay back within a 6 to 9 month period, which is fantastic, frankly, relative to peers and other industries and so forth. And so we see that as a huge driver of our business going forward. That said, we also got some cool new products out there. We have Crack, our new payments app, Xstacks we talked about before, and so a number of new innovations that are now small, but we hope to contribute to significant numbers down the road.
David, thanks so much for joining us at the desk. Good luck on your fireside later on today. It was a pleasure having you.
Great, thank you.
Thanks, David.
That was Kraken co-CEO David Ripley. All right, we are going to head on over to the main stage now and hear from Ripple President Monica Long. to CoinDesk live at Ripple Swell in New York City. If you're just joining us, we'll be bringing you conversations with some of the most influential voices here at the conference. We're now joined by a familiar face in the Ripple ecosystem. He's here in a brand new capacity. Ashish Burla, the CEO of the newly announced Evernorth, joins us now. Hey, Ashish.
Thanks for having me.
Oh, thanks for being here. I know you were just on stage for some opening remarks. Talk to us about the energy over there.
Well, this conference, Swell, has come a long way. We did it 9 years ago in Toronto. This is our 9th Swell here in New York City. Each year, more to celebrate, more product announcements. It's amazing how far the XRP ecosystem and Ripple have come together over the last decade. I'm really proud seeing all these announcements and customers on stage, to see it grow from just a few people when I started to now almost 1,000. With hundreds of customers. That's like living a dream for a startup guy like me.
What is it about the Ripple ecosystem that has that real staying power, that sustainability, that thing that people just kind of want to latch onto?
Yeah, so hey, like when we started, I think the narrative around crypto was largely negative. And I think it was also about disbanding financial institutions. But we stuck with our guns and we thought, hey, listen, we want to build with financial institutions. We want to bring them along. And now you see how the crypto ecosystem has unfolded overall. And it is about bringing and bridging to traditional to crypto. But I think Ripple and the XRP ecosystem were built with that philosophy from day one. And I think it's now mainstream, but we got started 13 years ago in building this, and I'm glad to see that taking off now, and that narrative becoming popular finally. By the way, the regulation, the posture, that's also helped, and that has also been a catalyst for this next wave of growth here.
On the education side, I think years ago, and of course the XRP army is not part of this question, but XRP wasn't always the easiest narrative to help educate people, right? This idea of what I think of as just a, kind of multifaceted financial services entity or platform offering as many things as possible was a little bit outside of the education scope of currency, smart contract platforms, stablecoins, things. So I guess now with these events and this kind of explanatory power and sort of financial power that Ripple has, and the acquisition like of Hidden Road and the rebranding that as a explicit prime services business, do you feel just more like a big diversified financial services company?
Well, I mean, I think what's interesting is that we planted those seeds 12 years ago, but as you know, rebuilding the financial ecosystem doesn't happen overnight. So, hey, listen, there's ways to accelerate. The acquisitions that Ripple has done is great, and I think that'll accelerate adoption. Again, bridging traditional finance to crypto. But then there's a lot that I'm excited about building directly on the XRP ledger as well. And that's what I'm excited about with my new company, Evernorth, which is a XRP digital asset treasury. I think that is going to be a wedge that helps traditional institutions that want exposure to crypto be able to participate and get exposure, and in the future get exposure to DeFi, but as easy as holding a stock. Right. So you can just go into your portfolio and you can add XRP and Evernorth, and you'll get access to a lot of what crypto has to offer.
We are kind of big fan. I don't know, Jen, if you are. I'm a big fan. I'm going to say we're big fans of the DAT structure because it gives a lot of the benefits of, let's say, an ETF wrapper without some of the sometimes unnecessary constraints like daily liquidity and things like that, or it allows treasurers to really do interesting things that can't be done in other wrappers. So, having XRP in that kind of format is obviously going to be great news for the faithful. What kind of things are you able to talk about now that you can do in terms of once you have that in your treasury to make it more appealing to folks?
Yeah, so I mean, I think just a couple of things. One, by holding public stock equity versus an ETF, and ETFs are great too. I mean, they help plug in to the traditional system. It makes it easier. But I think what we can do in the future at Evernorth is also plug into the DeFi ecosystem. We can earn yield on that treasury. Now you think about how hard that is for individuals, even for myself as a crypto, OG as they call, it is a lot to unpack to participate in the DeFi ecosystem. What I'm excited about is bringing that with a couple of clicks. You can go add the stock, but then you get exposure to all that great goodness that could potentially be coming down the line in the DeFi ecosystem. But to start, we're going to go and earn yield on the treasury using traditional methods. And so, we'll have a blend, but when the DeFi ecosystem starts to grow and mature with the right kind of controls, we'll be ready to participate in that ecosystem, and we want to build that right on top of the ledger, XRP ledger.
I am a fan of the DAT.
Okay, I didn't think you weren't, but didn't want to speak.
I am a fan. You can speak for me anytime, Andy. I want to touch on why now's the right time a little bit. Like we mentioned, you were building within the Ripple ecosystem at Ripple for 12 years. Now you've stepped outside, building on the XRP ledger with Evernorth. We talked a little bit about regulation at the beginning of the interview. Was regulation the catalyst that made you want to, step outside and build this project on top of the ledger built by your old employer?
Yeah, so they became an inflection point. And I will say, one thing was the passage of the Genius Act. Stablecoins right after the Genius Act was passed grew 18% from the Genius Act passing to now. So you see what a catalyst like regulation can do to get the institutions interested. And then when I started talking to investors from around the world, it was a different kind of investor for Evernorth. It was a kind of investor that hadn't participated in crypto before. So that was a good indication that institutions are now ready to participate. And you know what's great is that the United States could potentially lead in terms of regulation. That's a very different scenario than we had over the last 4 to 8 years. And so that gave me the idea, it's time to go. And hey, I build for the long term. I started in 2013. I'm excited. This isn't going to be a 1 or 2 year project. This is going to be the next wave in bringing institutional capital to the DeFi ecosystem and blockchain. And that's what we need to scale. I mean, it is not going to scale unless we get the banks, we get the financial institutions to participate in this revolution on blockchain.
Distribution is so important, and we were just asking this question in our previous interview. For a long time, the complaint against crypto is it's too volatile, right? And now many assets are much less volatile than they used to be. Actually, volatility turned from a bug into a feature. And I think, especially in the DAT world, right skewed volatility is something that people will, lunge for rather than shrink away from. In your long-term project, you can see, your primary asset becoming much and much less volatile over time. Yields may move as well. Will that just change investor behavior, or will that change your strategy? How do you think about, the volatility future of XRP and how that will change how your treasury behaves?
Yeah, I mean, well, you are very well versed in this industry, so kudos to you for just hitting what this is about. So, yeah, I mean, hey, listen, it's maturation, and if you shift from one thing to another when that does happen. And listen, I don't know if that's going to happen in 3 years, 5 years. We just have to be ready. And how do we get ready? We get ready by offering new kinds of potential yield products for the treasury.
Right.
And again, those will mature as well. But hey, at some point, this is going to be mainstream. And isn't it going to be great to be one of the first to build? Because first mover advantage really does matter. And getting to scale does matter in the DAT space in particular. I think you're going to see that maybe there's room for one, maybe there's room for two around each chain, but then it's a pretty long tail. What is the purpose of investing in your third or fourth DAT around a given token? And so, hey, let's get big. Let's use the right kind of risk. Yeah, let's get going. Big. But let's be responsible.
Get fast, get going.
But let's be responsible too, right? Like let's learn from the mistakes of the past. Let's build in the right kind of risk controls, because we're talking about institutions now, and we have a lot more to lose. So we got to get it right. This isn't a move fast and break things Facebook thing. This is let's do things properly. We're talking about finance.
Yes, move fast and break things is a great tech strategy, a poor finance strategy.
Yes.
If one DAT stumbles, will the other suffer medium term from the damage?
It really depends, and I think hey, listen, at the beginning with blockchains, a lot of blockchains stumbled. Yep. But I think the ones that were looking at this from a long-term point of view bringing in the compliance people, which was, sort of, I guess, against the movement back in 2013, but, we did it. I think things like that, being the grown-ups in the room, being the adults in the room, and helping blockchain mature is our positioning at Evernorth. And so, yes, there may be a shakeout, but I think like the strongest, the folks with the long-term view, the right kind of risk controls are going to survive. And we saw this play out again and again. I've been through a lot of crypto winners. I've been through some summers. I know you got to stay even and you got to build for the long term.
Ashish, thanks so much for joining us at the desk. We hope you enjoy the rest of the conference.
Thanks for having me.
Thank you.
That was Evernorth CEO Ashish Birla. We are going to head on over to the stage now and take a listen.
That wallet to be able to facilitate all of that choice. And they don't want to have to move back and forth between digital fiat and traditional fiat. So we want to make that choice available to them, but changing the nature of the underlying security, not creating a wrapper with a derivative on it, because what we don't want to do is hive off liquidity into trapped pools and frankly hollow out the liquidity of the overall markets. One of the things that makes the US markets special and unique is the depth of liquidity and the confluence of investors, retail investors, institutional investors, hedge funds, all coming in and contributing to price discovery. So what we've filed for is to say, look, we manage 3 million messages a second. In our US equities markets, we're probably managing anywhere from 3 to 5 billion messages just inbound into our systems every day. In options, we're talking about 80 to 130 billion messages in our systems every day. So these are very, very scaled systems. But the post-trade processes is where we really want to focus. So we're teaming up with DTC to be able to create choice. So you put a flag on an order coming into the market that says, I want to settle this in a tokenized form. DTC takes that flag and basically, upon execution, and basically routes your settlement through a different decision tree. Think about it that way. And through a different process into a digital wallet. You want to sell that security, goes back up into DCCC, and it can settle in fiat. So it really allows the investors to have that choice. And we're very excited to be teaming up with them. We do want the actual CUSIP itself to be transformed into digital form versus traditional form. So it's not a matter of changing the nature of the security. It's a matter of making it so the security itself is tokenized.
That's exciting. That's a real reinvention. Genius Act addresses stable coins, but there's more work to do on regulatory clarity, I would say. So what would need to take place to pave the way for that vision to come to life?
Well, we are really pleased to see that the government is focused on it very holistically. You've got the legislative branches really focusing on how to put the right regulatory guardrails around stablecoin as well as around the markets, and as well as the SEC and the CFTC coming together. And I've been at NASDAQ, I started at NASDAQ 32 years ago. I've never seen the SEC and the CFTC work as well together as we're seeing right now.
That's amazing.
It really is, we should be very thankful for that moment because there is a convergence of asset classes. There is a convergence of retail and institutions expressing interest in trading all these asset classes. And yet there is a very different regulatory environment for securities versus derivatives. So how do we create more convergence of the regulatory framework that covers all asset classes, but including crypto? And then also, how do we support innovation while still managing and really, really focusing on the North Star, which is investor protection. So I think that's the one thing that we kind of drumbeat constantly down in Washington. Investors, investors, investors. This is about creating a better investor experience, but also providing the right investor protections. And so let's frame the framework that we really focus on is modernizing the infrastructure while protecting investors.
Could you see initial coin offerings being a part of the picture, a part of the future for NASDAQ?
Yeah, I would look at it as more, I just think about it as more as tokenized equity issuances as opposed to initial coin offerings. Because I think that's a little bit different. So tokenized equity issuances, yeah, I can see that being a future for the markets. I think let's start with post-trade. Let's get the securities, the underlying CUSIPs in a tokenized form. Let's allow them to sit in digital wallets. Because that will then, I think, will kind of move up through the system and back up into then how do we actually issue the security? How do we make that initial listing available in a digital wallet? So, but I think we have a ways to go, and I would also say we want to do it the right way. We just have to recognize that our U.S. markets are incredibly resilient, extremely scaled, extremely inexpensive for investors, and highly liquid. So we just don't, let's keep that. Let's keep all those great things. And then let's put the technology in where we can actually reduce friction. Does T+1 settlement need to exist over the long term? No. But we have to think about how to create T0 settlement without actually forcing grossing up of positions, because that'll actually be very capital inefficient. So how do we kind of allow for this innovation to come in a way that enhances the investor experience but doesn't have unintended consequences?
This view of the blended system certainly aligns with how we think the future will play out. And you were taking a very forward-leaning approach to it, and you mentioned working with DTCC, which is really encouraging. But can you give us a temperature check of the rest of the world of banking and other kind of major legacy institutions who would also need to be a part of the picture?
Yeah, I mean, so first of all, the banks continue to be obviously an enormous component of the economy, and I think that they've also lived through a lot of issues in the past,
crises,
and they are informed by their experience. So, and that they are informed by the experience of the fact that when you do not have regulatory clarity, you can make mistakes, and then people will look back on those mistakes and then suddenly kind of overreact sometimes, frankly, with regulation. So they are really seeking regulatory clarity. If they have regulatory clarity, they understand the rules of the road, they understand that the rules are there with the investor protection as kind of the North Star, then they can work within those rules. And I think they're all expressing an enormous amount of interest in getting more engaged in the digital asset ecosystem. Obviously, they're doing a lot of work already to tokenize fixed income, tokenize bonds, create stable coins. I mean, you're seeing actually a lot of activity within the banks themselves to get engaged in the ecosystem. But I think to get them really engaged in the markets, there has to be regulatory clarity. And I think that will make it so that it accelerates the institutional adoption of digital assets in general.
I think that puts a great bow on the conversation. You've been so wonderful. Thank you for being here.
Great, thank you. Thank you very much.
Thanks, Adina.
Good morning, everyone. Thanks for joining us. My name is Nick Day. I'm moderating this panel. I'm from CoinDesk. We're talking tokenized assets. I'm going to ask my panel to just really quickly introduce themselves. Max, let's start with you.
Hello, I'm Max Stein. I work on the digital assets team at BlackRock. I've been there for about 4.5 years, and we focus on tokenization, bringing crypto assets to public markets, and stablecoins.
Hi, everyone. My name is Rory Callaghy, and I lead the funds and asset management ratings team at Moody's Ratings. So we rate asset management companies that are getting into the digital asset world, as well as tokenized funds, assigning assessments to tokenized funds.
And then Nicola White, I'm the VP of Crypto Institutions at Robinhood. Focused not only on our Bitstamp product, which we acquired about 5 months ago, but also on our liquidity provision and our market-making relationships globally.
So let's, I guess, get things started. Let's talk about what we're talking about. Tokenized real-world assets, stock tokens. what do you guys see as this market? You know, how are we defining it?
I think it's the representation of ownership or the reflection of ownership in the form of a token on a public blockchain. And that ownership is an ownership right in a off-chain security.
Cool.
Nothing to add.
You know, I would just say, I mean, at least from the tokenization perspective, you know, really see the opportunity for everything to move on chain. And like, let's call a spade a spade. The reason that we're having this conversation is it costs a fraction of what it costs in traditional finance to run a crypto or a digital asset business because of the efficiencies that blockchain bring to the business. And so, you know, would we have been having this conversation a year ago, given, you know.
And welcome back to CoinDesk Live from Ripple Swell in New York City. I'm Jen Sanasi. I'm here with my co-host, Andy Bear. And Andy, this is a private invite-only event. I'm so happy that we're here and we get to bring some conversations with the folks like we've had on the desk so far to the folks who are watching at home who weren't able to make it to the event. Talk to me about some of your takeaways so far. We've talked to Kraken, we've talked to Evernorth. What are the themes that are shaping for you?
I see a lot of health in the industry, right?
Yeah.
I hear about Kraken having great results, even though, let's face it, in a sense, there's competition now for trader dollars. They're reacting by acquiring DCMs and getting into the futures market, aiming for prosumer, trying to become more diversified as a service provider, adding technology, finding capital to be able to build. And then with our recent guests, we're seeing the digital asset treasury space is a way for treasurers and CFOs to really add value to token holdings in a professional way that is a little bit different from ETFs, which are also quite useful, a little bit different from private funds, which are also quite useful, but give that agility, access, and things like, access to yield and things like that. So a lot of building. And then just look, generally, as we're hearing commentary from the main stage, it's very kind of mature, and this is what we're going to be doing. These are proper meetings with people wearing, kind of maybe not ties, but I miss the days of ties, but they're wearing jackets and they're talking clearly about the future. So a lot of capital, if you can feel the presence of capital in the room, that's being put to work. So it feels very energizing.
Andy, we never told you you couldn't wear a tie.
I know,
you can wear a tie whenever you want. We would all appreciate it. We would all appreciate Andy and
tomorrow.
You're always looking very
XRP Army,
spiffy.
what do you think?
Let us know in the comments below. Should Andy have a tie tomorrow?
Tie
I think
Tuesday?
That's probably one of the big themes that are going to come out of the event. You know what really stuck out for me? We were talking to David Ripley, co-CEO at Kraken.
Yep.
He was talking about the marketing dollars that Kraken spent years ago, not really focusing on marketing. He's saying they're spending a lot more. And what I would have liked to ask him is, are they focusing on new crypto consumers, or are those marketing dollars being spent elsewhere, looking at folks who've been in the industry for a long time, maybe those pro traders, maybe some B2B marketing when we think about institutions. I think that also speaks to a little bit of maturity, because I think back to, I don't know if it was 2021, when crypto companies, crypto exchanges were spending tens of millions of dollars on Super Bowl ads and these insane events. Even the marketing feels a little bit more mature.
I'm pretty happy that he was able to get that rear wing Kraken painted on a Formula One car for so many years for under $5 million. So maybe there was a little bit of extra. Look, a lot of the crypto advertising was about shock, and I'm thinking about the Coinbase ad a couple of years ago at the Super Bowl, and it was about being new, being different, fighting against the system. That's all got to change, right?
Yeah.
This is more about having a more controlled, normal, positive, delightful financial services experience. We haven't even gotten to that point yet where a lot of these normal behaviors like payments or investing or allocation or mixing of traditional assets in crypto is just kind of more normal, and actually something that something that you would see maybe during a golf event than a football event or painted on the top of a stadium. So it's a big shift. I think it's a challenge for marketers to find the right tone of where are we right now when things are shifting so quickly.
I really like that point. We're not fighting against the system. We're building the next iteration of the system that already exists, right? We're fixing the issues. We're filling the gaps. we are building the next version, not a completely different one. Although if you want a completely different one, there are options for you.
That's true. I mean, the rebellion is not meeting at a high floor in Hudson Yards, right?
Yeah, exactly.
This is where success begins to be able to recognize itself. And again, I just think back, it's election day and a year ago. Look at how much has changed in a positive, constructive way, in a non kind of sort of angry or combative way.
Yeah.
It's really kind of about building in capital, feeling free to enter the space. So feels pretty positive. I'm looking at the markets today. It looks like they've recovered a little bit from the overnight malaise. So maybe we can, maybe the XRP army can kind of will all of the asset class higher and bring equities along with it.
The XRP Army has their work cut out for them, Andy. We'll check back in on the markets with some of our guests later on today, but our next guest joins us now. She's leading the charge on digital asset integration from within one of the world's largest banks, global head of digital assets for Citi's Treasury and Trade Solutions. Ryan Rugg joins us now. Ryan, it's wonderful to see you again.
Thank you for having me. I appreciate it.
I think we've seen you at almost every event we've been to. Talk to us about having a presence here at Ripple Swell. What does that mean for you? What does that mean for Citi?
I think it's really important, and you were just alluding to it, where, TradFi coming together with DeFi for that true enterprise adoption and scale. I think a lot of times media wants to polarize it, where it's either TradFi or DeFi. But actually, I think that them coming together to truly get enterprise adoption is really important. And, we're starting to see that, through partnerships, through, engagements that we're doing. So excited to be here at Swell, share what Citi's doing in this space, and really start to, collaborate with the industry as a whole.
For our audience at home who might not have been following Citi's story as closely as the rest of us, talk to us about what you are doing in this space. What's taking up most of your days?
Yeah, so our strategy is really three-pronged: build, buy, partner. And if you think about the build, we've been building what's called Citi Token Service the last couple years, where we've really started to scale over the last year. And really what we're trying to solve for is real-time liquidity and payments, that 24/7, 365, instant movement of money across borders. So we're live in US, UK, Hong Kong, and Singapore. We strategically targeted our largest money hubs that have the most amount of friction. We're adding additional currencies and markets later this year, as well as, partnering. Partnering's really important. I've been in this space a decade. There's a lot of great technologies out there and companies out there. We recently announced our partnership with Coinbase, which I think is really important. So, we view this as a new set of rails. And if our institutional clients want to be able to have access this market, we want to do it through, building as well as partnerships and in investing. We're a very active investor in this space as well. We invested in BVNK, and we'll continue to do that to support this ecosystem.
I kind of want to hear how you do it, because a person in your seat, you have to start by being the crypto person over there, right? When everybody's saying no, and people or the customer voice isn't loud enough to actually change things, especially at a super tanker like Citi. But now I hear Citi, 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 right? I see a lot of announcements, hearing a lot of outreach. And, you kind of have to, things are going to get beyond the control of one kind of rebellious voice, right? So you kind of have to change your feathers a little bit. How do you handle it, and how do you kind of make sure that the Citi experience is homogenous and conducted in the right way, and make sure that upper management remains consistently supportive?
So it's definitely not one voice. It takes a village.
Yeah.
I mean, it definitely takes a village, where I work extremely closely internally with risk, compliance, legal, all the various facets, but also externally, with our regulators in this space. So I've taken a very collaborative approach, where we do a massive amount of education internally as well as externally, because as you said, it's an innovator's dilemma, right, with this technology. But viewing it as a new set of rails, and if our clients want to use these, we need to be able to build up these services for our clients. And that's how we're viewing it, and taking a very collaborative approach with the industry, but also because clients don't want just a Citi token, right? And nor do we need a blockchain for a purely Citi token. But from day one, our strategy has always been network driven. And we've been in the private permission world because that's the only place we could operate, right? And now with this new administration and Genius and the clarity coming, hopefully, no pun intended, it gives us that clarity about what does it mean for highly regulated institutions like us to be able to, engage with public chains, because we don't operate in the gray area, right? So unless it's clearly permissible what we can and cannot do, we're not going to engage in that space.
Having worked at banks many years, banks are proud, and whatever bank I worked at, I'm sure the bank name token was everybody's first thought. What was it like to try to, convince Citi that Citi token wasn't maybe going to be the way through?
So,
Putting you on the spot a little bit, but I think it's important because we've seen capitulation become consensus with a lot of bank representatives. And we're delighted to see it because we think it's the best path forward for this to remain a vibrant community for all. But, the politics are significant.
Yeah, so Citi's been engaged in this space for quite some time. I've only been at the institution for 3 years now, but in this space for a decade. Been at large global system integrators, worked at, my own protocol, building that out. So I think it's really about what's the pain point that we're trying to solve for clients. Like everything we do is based on our client demand. And clients really wanted that 24/7, 365 movement of liquidity and payments across the ecosystem. And how do you make it as easy as possible for our clients to do? So we completely obfuscate the complexity of a blockchain. Because you think about technology over time and the adoption. Like, why was the BlackBerry not adopted, but the iPhone was? Because it was really easy to use. It was extremely intuitive. So like with this technology, the way that I've advised multiple banks in this space prior to coming to Citi, the way that we addressed it was like, we do all the work in the background. It's either a drop-down box that says Citi token service, and we'll mint the token in New York. If it's 5 p.m., we'll send it to Singapore, we'll burn it. So it's cash for cash in their account. Because if you think about our large corporates and our large enterprise that we're serving, they have their treasury management and ERP systems aren't necessarily real time. Taking out the whole tokenization. So how do we make it as easy as possible for our large enterprises to adopt this technology, but just have the underlying benefit of that frictionless movement of fiat around the globe?
Is there one region where clients have the loudest voice of demanding new services, or is it really just global clients who really want to move things back and forth? I'm just kind of curious where the client energy is enough that they're demanding new services.
Yeah, it's really global. And we targeted our largest money hubs, US, UK, Singapore, Hong Kong, with the most amount of kind of like time conflict and banking holidays to remove that friction. But from the type of clients you have everyone from like a large e-commerce platform who has a US domiciled marketplace that is sending money back to Asia suppliers real time. You have, PIs on there. You have household names that you and I use on a daily basis that are paying suppliers, that are moving liquidity based on their needs. And or for instance, we had a broker dealer in Singapore that was using the platform because it was Chinese New Year, so the bank was closed. So typically what they do is they'll forecast and move the money to the US for their equity bond margin calls. But instead of being able to have the forecast, they were able to do that just in time. So again, just removing that latency kind of within the system for our clients, but it's really a broad base of clients, and we're almost at 100 clients now.
Is there an appetite within the firm to explore public blockchains, or are private chains kind of good enough for now because they are easily controllable, there are no outside factors that are going to add any kind of additional risk into the mix? So talk to me a little bit about that.
I think it's really important to get regulatory clarity in this space, because regardless if there's appetite or not, it's like, what is permissionable for highly regulated institutions to do? And we need legislation, and then we need our regulators to kind of opine on this. Are tokens going to be treated this synonymous to what money is? When money comes into a bank, we do the KYC, AML, BSA. But because of this technology and the mutable record, you can see 5, 10, 15 hops ago. If it was used in a sanctioned country or an illicit behavior, what are the implications to our clients as well as us, right? So I think that regardless of appetite or not, we need really that clarity to kind of like unfold before we kind of engage in that space.
And what kind of due diligence are you doing when you're looking at partners?
Oh, there's a massive amount. And there's I'd say there's different ways of partnerships that we do. Obviously, like the Coinbase partnership was to be able to enable our clients, bridging that TradFi and DeFi. We also invest in this space. We also, buy, right? So it depends like what we're doing. The due diligence to onboard a partner to be able to use their technology, you go through the traditional TradFi checks and balances, CISO, all that. Investing is different. So I'd say it depends what sector you're kind of thinking about partnering with.
There doesn't seem to be any, read about any changes to expectations about when the statutory capital charges for banks to hold digital assets might be loosened a little bit. Where is that on your radar? I'm sure that you've prepared for that in case it happens all of a sudden, which I don't think it will, but how do you think that that will change your activities, and what kind of break glass things happens when that loosening starts to happen?
Yeah, we've done a lot of due diligence in this space, but the what if scenarios in regards to that, like we haven't, kind of engaged. But I think that there's any clarity in this space is always welcomed for us. Like what Genius was welcomed, the market structure bill. We're very active in DC, engaging the market to explain our client demand. We have what's called an early adopter program within City Token Service. Like everything we do is client driven. Everything, it's not what Citi wants to do, it's really servicing our clients. And I think that's important. From my past experience, I had definitely, built things, prior that I thought would kind of break the system. But ultimately, adoption is really important and meeting our clients where we are. So I think Citi Token Service can help bridge that gap between crypto and, TradFi. We can move money instantaneously, because until we're in a world that you and I can pay with coffee with a token, you still need to convert back to fiat. And now that we're making those rails more efficient, not just with tokenization, we're also modernizing our current infrastructure. I think that's really important.
Ryan, thanks so much for joining us at the desk. We'll see
Thank you for
around
having
the
me.
conference.
Sounds good. Thank you.
That was Citi's Ryan Rugg. We are going to take a quick break. When we come back, Bitwise's Hunter Horsley joins us at the desk.
My name is Brandon Franz. I'm a father, a husband, and a real estate investor, and I live in Omaha, Nebraska. I have a great wife, Tracy. With her, my high school sweetheart. I have 3 teenage daughters. They're very competitive, they're scholars, they're dreamers. Overall, we just want to build a secure future that we can trust and live peacefully in. Crypto has opened up so many more doors just in my personal investments, my business, and my family. Tokenization of real estate on the blockchain is changing it to make it more of a system that is inclusive to everybody. Property tokenization is very similar to maybe like a pizza, right? At some point, you can go order an entire pizza. Other times, you might just want a slice. When I first saw real estate tokenization, I thought, wow, it would be a blast to own a piece of real estate in all 50 US states. And so it's allowed us to have more of control of our time, and most importantly, control of our future destiny. I love the idea that I can go anywhere I want and have the sovereignty to spend my money the way I choose.
Hello and welcome back to CoinDesk Live. Our next guest has been at the center of bridging traditional finance and the digital asset economy. Co-founder and CEO of Bitwise Asset Management, Hunter Horsley, joins us now. Hello.
Hi, how you doing?
We're doing absolutely splendid. We're having so much fun at the desk. We are very happy to have you join us here. Talk to us about what you've experienced so far. What's the energy been like? What kind of conversations have you been having?
It's incredible. I think it's indicative of the broader story this year, which is traditional financial services and crypto are finally coming together. The space has been around for so long, and they've almost been 2 separate worlds. And I think here at Swell and in general in 2025, they're connecting. And we see that in our business at Bitwise too, and I think it's one of the most exciting years for the space.
Your firm has been one of the great explainers and evangelists, but also the firm that's figured out a lot of the plumbing to get product out even before ETFs, and now things are changing a lot. So, what do you expect investors to do when all these ETFs are out there? Are they going to trade them? Are they going to hold them? What are they going to do? Are they going to put them in retirement accounts? What's your best case for investor behavior?
Sure, yeah. So Bitwise today manages $15–16 billion. We have 30 different investment solutions. We have ETFs in the US, ETPs in Europe. We run hedge fund strategies, private solutions. We stake directly for clients. We do a lot of things and have a bunch of surface area. We have a data point on that because last week we launched the first Solana staking ETF. The ticker's BSOL. And it's gathered, yesterday it took in about $70 million, and it's gathered over $400 million in 5 business days. So what we've heard anecdotally is there are advisors who bought it, a few faster moving advisors. There's hedge funds and institutional asset managers who have already started to trade it. and individuals who are using the benefit of an ETF, allowing them to access it in retirement accounts and other types of accounts. So I think that there's still a huge amount of capital that has not been able to access many assets. If we're fortunate to be able to launch an XRP ETF, I think it'll be a similar story. Having said that, I don't think that investors are going to have a portfolio of 23 different digital assets or digital asset ETPs. So I think over maybe the 6 to 12 month time frame, more investors will turn to index solutions. The Bitwise 10 Crypto Index Fund, ticker's BITW on that, is the largest index fund in the world, and a portfolio of the top 10 assets. I think that may become more in focus as a solution for not having to select specific exposures. But right now we see, I mean, BSOL was the largest ETF launch of 2025 across every asset class out of 850 products. So I think there's still a lot of demand in traditional capital markets that haven't been able to tap into exposures.
It's kind of a wild story. I mean, did you predict that BSOL would perform so well? And dig a little bit deeper. Like, what is this telling you about future products to come?
Yeah, well, we've been in the space for 7 years, or maybe 8 now. So, you know, there's always risk in trying to predict any given week or moment. I would say that we're thrilled with the response, and there were also other crypto asset ETFs that launched last week, Litecoin, Hedera, and I think they took in less than $10 million. So to some extent, these ETFs are vehicles for getting exposure to an underlying asset, and inflows and demand are going to be related to the extent to which investors want exposure to that underlying asset. So Solana, I think, has an incredible story, sort of perfect for this moment where tokenization is underway, stablecoins are underway, and being a platform for capital markets coming on chain is a very useful role for Solana to play. And so I wasn't surprised that there'd be demand. I think being the biggest ETF launch of 2025 is remarkable, and certainly almost $500 million of inflows in 5 business days is significant for an ETF.
For sure. One of the themes we've been covering this morning is how volatility has come down, especially in Bitcoin, but in many other assets as well. And I guess there's a supply curve and a demand curve there, right? We've always wanted lower volatility to bring in more investors who were scared of high volatility, but of course a lot of people who get into crypto, especially the ETF side, kind of like that volatility because it's on the right side of the of the distribution skew. Solana is a good name to talk about. It's still pretty volatile. It's still pretty spicy. You know, what do you predict Solana's volatility might look like a year from now? And will that make it less interesting, or will that just convert the investor base which is interested in holding it?
I think for assets outside of Bitcoin, you know, Bitcoin volatility is now around 35 or something along
Incredible,
those lines.
right?
Yeah, which is remarkable. It's less
happy NASDAQ stock.
Less, yeah, exactly. Less than certain names in the Mag 7.
Yeah.
I think that the world is ingesting a consensus understanding of what Bitcoin is as digital gold, a non-sovereign monetary instrument, and volatility in some ways represents the extent to which investors don't agree on what something is or what it's worth. And I think as Bitcoin is continuing this journey of really building a consensus, that doesn't mean that everyone will want it, but if they sort of have a shared understanding of what it is and how to think about what it's worth, then the price ranges get tighter, right? I think for the other large assets like XRP, like Solana, Ethereum, I think that we'll continue to have volatility for the next 12, 18 months, because the thing that sometimes in crypto people can forget is investors are busy. You know, there's AI going on, there's what's happening with macro, the government, they want to take a family vacation potentially, they have their own clients, and so they're interested in and engaging with the space, but they're not able to think about it multiple hours every day. And so I think that there's more thought development that will need to take place with Solana and XRP and Ethereum before consensus emerges on those assets. So I think they'll continue to be volatile for some time to come.
Do you think an XRP ETF would outperform the Swell one that we just spoke about?
I think it'll be a huge product. There's a ton of interest in XRP, you know, my colleague Matt Hogan, our CIO, likes to say that the death of an ETF is apathy. And apathy is certainly not one of the elements of XRP. There's a lot of energy and interest and enthusiasm. So I think, you know, there's $100+ trillion that live on traditional rails. and more of that is migrating on-chain. But nevertheless, there's $100 trillion there. An ETF is often the first time that much of those assets can tap into exposure to an asset, and I think if they have the opportunity to have exposure to and trade XRP, it'll be a very useful and high-demand product.
2024's market was dominated by availability and narrative and education by Bitcoin, and people who made their first foray into digital assets.
Yeah.
Let's say the advisor class, it was pretty obvious what they were going to do first. Now, with a proliferation, as you mentioned, of course, you won't be surprised here. We agree on the idea that indices are a good way to contain the whole asset classes ones and provide allocation. This idea that holding Bitcoin only is more of an active choice, right? Do you find, do your distributors and people who talk to your clients find that that's a sticking point, right? They're comfortable with their Bitcoin. Bitcoin is often outperformed because it's less volatile and it just, gets a certain amount of lift. But it's an active choice now, right? It was with all these other things, and it misses a lot of the growth opportunities. How much time does Matt and how much time do both of you spend on trying to almost dislodge or at least iterate on the progress that the industry made last year?
In my experience over the years, many investors have a historical predisposition, and it's very hard to redirect that in crypto. So if it's an individual who does security selection and is a single name conviction investor, maybe they like NVIDIA, but they don't own any other semiconductor company. Right. Or they like Palantir, but they don't own any other defense prime or AI company. Then they're going to have that approach to crypto, most likely. Conversely, if they historically are an asset allocator or use diversified instruments, that's where they're going to wind up in this space too. So I think there might be, a few swings here or there, but by and large, I think that the diversified story is going to have a huge resonance because that is one of the most popular ways to invest in the asset class. Having said that, I do think that Bitcoin is one of the biggest opportunities, the opportunities that people are most comfortable with. So I don't think Bitcoin's role will diminish. I think actually what will happen is people diversify, but their overall exposure and allocation to the space will also increase. And in BITW, the Bitwise 10, for instance, it's 60-70% of the portfolio. So I think Bitcoin has a huge journey ahead, but I do think, to your point, that indexes are going to become a lot more popular.
Bitcoin is at around $104,000 this morning. Is Bitwise's $200,000 projection by the end of the year still in play?
I'd have to ask our CIO. I suspect something directionally like that is true. I think there's been a rotation. We have a wide range of clients from sovereign wealth funds, banks, wirehouses, financial advisors, hedge funds, and crypto natives who have a lot of assets. I think a number of crypto natives have taken some principal off, sold some of their Bitcoin at above 100,000. So I think that that's the story here. But the story with the rest is, for the first time, we have clients who are making 2, 3, 4% model allocations in Q3. Q3 was the biggest quarter for our distribution team in history. So the storyline we see for new investors coming into the space is that demand has never been more vibrant. The way that that plays out day to day in terms of the bids and the asks and is anyone's guess, but I think we're going higher.
Hunter, thanks so much for joining us at the desk. We hope you enjoyed the rest of the conference.
Thank you. My pleasure.
That was Bitwise CEO Hunter Horsley. We're going to take a quick break. We'll be right back.
Came into the space, whether it was inflation hedge, investment, and this new technology, speculation, what have you. Now we have hundreds and hundreds of millions of people that have adopted. Right. And now we have businesses that have integrated with crypto, we have individuals that are holding it. And what we see in our customer data, people are starting to use it for payments.
Yeah.
And so we're kind of starting to get to that point.
Yeah. The dream is realized.
Yeah.
So let's talk a little bit about that evolution or that arc of time over the crypto industry. And I'm curious to get your take on it takes a village in many ways, right, to get to the market size that we're at today, and so many different client types, if you will, or members of the ecosystem. And how much of that over your journey has been friendly collaboration to co-opetition to outright competition? How do you think about that? Are we still all in it together, and at what point do we start to kind of take our respective corners here?
I still think we're all in it together for the most part. I mean, I think by construction, by definition, what we hope all of these blockchains and technologies and networks to be are open. I know that's like, a founding principle of Bitcoin. It's, certainly a foundational piece of Ripple and many other networks out there. They're built in line with the internet, which is, intended to be an open network, open set of protocols. Now, of course, some parts of the internet were like, hey, this one part got centralized. And we usually, at least us in the crypto space, we're like, well, that's a real fucking bad thing, right?
Yeah.
So we're like, and I think, crypto is now a place where we can kind of like, further bend that curve back to open networks. And I think that means that it's a community of individuals, participants, yes, businesses, that build technology on these open networks. I mean, of course, there's this, network out there, Ripple, but we were one of the first companies to list XRP back in 2013. I think maybe at least the first major exchange to list RLUSD.
I was just going to say, you were one of the early partners of ours and just eclipsing $1 billion a market cap the other day. I want to say thank you for being an early supporter of that. Let's talk about stablecoins, near and dear to my heart. I'd be remiss if I didn't bring it up. I'm curious to get your take on the industry. I mean, crypto's obviously having a moment and stablecoins are having a moment in the moment. Fun place to be. While certainly an early supporter of ours, you've also joined a consortium with the USDG folks. And now it seems like, every week there's a new entrant into the stablecoin issuance market. How do you see the current market? How do you see this kind of playing out, over time?
Yeah, well, I mean, just to like really break down stable coins and, their history and what they are. I mean, I think there's 3 use cases today and have been for some time. I'll start with one which maybe wasn't the first, but it's actually to hold the stable coin. Like there's a lot of people in the world that actually are just interested in holding stablecoins. Not so much in the U.S., right?
Yep.
But I mean, if we look at the different parts, again, we see it in our customer base. People come on the platform and they're just interested in buying a stable coin with their native currency, Argentinian pesos, and then buying a stable coin and holding it.
So that's an inflation hedge or a store of value relative to what would happen. You cash your paycheck, right, and get into a stable
absolutely.
coin.
I mean, these individuals are, have likely attempted to or wanted to hold dollars or have, whether they've had to hold, paper currency or find some way to, get exposure to US dollars from some offshore bank account or whatever it is. It's not easy. It's costly, all these types of things. That's number one. I think it's really important. I think the kind of like the payments use case is important, but like you actually need individuals to want to hold this stuff in order for the payments use case to come about. So that's number one. The second is, well, it became kind of the quote currency, settlement currency, collateral currency for all of the centralized exchanges to, network together. Then the decentralized exchanges, that's the biggest volume use case for sure. And so that, moved us to a place where you have many of all these different individuals and entities that now, own and use stablecoins, and frankly, as a form of payment. Moving money from one of these places to the next for their end use cases to, trade, invest. But that's it. And then lo and behold, here we come with actual payments usage, which is now what we see over the past several years, businesses and individuals. We see it more so, among our customer base as we understand their activity and on-chain analytics, all these types of things. Kind of developing world to developing world country. So how does that individual from Brazil send money to someone in Vietnam or China or what have you and so forth? So there's really just limited rails, and so stable coins are really shining there. And so we see kind of all of these various different use cases coming into the fold.
Well, those themes certainly resonate with me, and I think 2 of the acquisitions that we've made at Ripple really showcase, I think, the opportunity. Obviously, the Hidden Road, now Ripple Prime acquisition. I want to talk a little bit about collateral use case in capital markets and also more recently the G Treasury, because that same thesis around cross-border payments now is happening at the corporate level, where I think large corporates are looking for ways to more efficiently move value, and being able to do that on chain overnight, on weekends, and kind of free up trapped capital is a huge unlock. But more, near and dear to your heart on the capital market side, what needs to happen, do you think? One of our theses is around RLUSD being accepted as good collateral at exchanges, CCPs, et cetera. In your mind, what needs to happen there, and is there a place for an interoperable stable, or can there be many that kind of fill that need?
Well, this is, I mean, I think what we got to do is we're going to take that story that we just played out, and we're going to have to put it on repeat.
Yeah.
Is what I think is going to happen. It's going to happen over the next few years. So the reality is, again, there's actually, the beautiful thing about crypto is that there's a certain set of steps that individuals or businesses need to, adopt crypto. And it turns out that for individuals, it's actually maybe not that difficult. You got to download a non-custodial wallet and you get into it and so forth. For businesses, particularly large financial institutions, well, they need regulatory clarity, and they got to decide if they're going to build their partner, and they got to go through all this due diligence, and they got to integrate, and then they got to figure out things like accounting and so forth. It's a lot of work for these financial institutions to adopt crypto and so forth. But I think the story that's going to happen on repeat right now is we're like talking to every bank, broker, and fintech out there, because they want to enable their customers to buy and sell Bitcoin, crypto, and other assets, XRP, you name it. And so they're going to go through all of those steps for that use case. In parallel, there's another team somewhere else at the company thinking about stable coins. But once they've gone through these steps and they've figured out the accounting and they have a reason to hold stable coins because their population are now, their customers are now buying and selling crypto with stable coins. Once they've gone through all those steps, all these institutions are going to have state crypto and stable coins out there.
Yeah.
And they're going to find what we found, which is if we're talking to another crypto company that's already integrated with crypto, we don't send them a wire.
Yeah. Yeah.
That's the most ridiculous thing you could imagine.
Yeah.
We send stable coins back. I mean, we get laughed at.
Sure.
With another crypto.
Your vendors, or you're moving your money around
because
to your different
it's
locations
it's
around
better,
the world.
faster, cheaper. But of course, you got to cross this threshold and get to these steps and get everything integrated. That's going to happen now. The same as it happened for kind of native crypto companies. It's not going to happen for banks, brokers, fintechs, all these other companies. And they're going to be settling with our RLUSD and everything else.
From your lips. So let's talk a little bit about the, thank you, by the way. Let's talk a little bit about the TradFi players out there. I've noted, a couple things you guys have done, the Ninja Trader acquisition, a TradFi trading software platform, and then also, I think a V1, I'll call it, but an early shot across the bow on tokenized equities. So talk to us a little bit about that, and how does this kind of play out? What is the capital markets landscape? What does Wall Street look like? We're here in New York. What does Wall Street look like 5 years from now? Am I going to Morgan Stanley and buying equities and crypto all in one app, or am I going to Kraken and buying my IBM stock and Bitcoin and XRP? And
well, this is one interesting thing, and if I think back to some of my mindset, probably differed from the Ripple mindset a decade ago.
Right.
It turns out
it's a safe zone here.
Turns out the Ripple mindset actually had some value to it. So, back in the day, I was like, well, this new system, Bitcoin, it's the most incredible thing ever.
Right.
And it's going to grow independent of itself. It's all built to be decentralized. And this old TradFi legacy centralized thing sucks. And never the two shall meet. This one's going to grow. This one will kind of decline in adoption, and people will eventually move over there. Well, it's actually not necessarily going to play out that way.
Yeah.
Right.
There's a convergence happening. Right?
The two are. It's going to be much more. It is much more fluid.
Yeah.
Right. It is much more fluid, and so there's the basics, which are, I already said, banks, brokers, fintechs are going to adopt crypto offered to their individuals. They want to buy, sell, hold. They want to use.
Hello and welcome back to CoinDesk Live from Ripple's Swell. I'm Jen Sanasi here with my co-host Andy Baer, and we are in New York City. Andy, I just asked Bitwise CEO Hunter Horsley if that $200,000 Bitcoin projection is still in play. He said he would have to check with Matt Hogan. I will tell you, I spoke to Matt recently, probably about a couple weeks ago. He said it was still in play. This morning, $104,000 Bitcoin. What are your thoughts? I know you don't give predictions, so I'm going to ask for your thoughts.
Exactly for this reason.
I'm going to ask for his thoughts.
Look, I like to look at these assets in terms of volatility rather than price predictions. And Bitcoin's volatility, as Hunter recognized, is down to about 35%, which is like, a Mag 7 stock, right? It's not 60 or 70. So in the next 2 months, for it to get to 200 would be in its own volatility a pretty significantly
Right.
strong event. So I'd say to get to 200 by December 31st, you'd need a catalyst that the market is not expecting right now. What is significant is that volatility number that's expressed both in how Bitcoin has behaved, but also how Bitcoin's options are being priced right now, right? A lot of people want to collect yield by selling call options over a Bitcoin holding. That compresses the options price. That tends to compress volatility. Plus, you have Bitcoin stored in DATs, you have it stored in ETFs, you have it stored with governments. You know, all of that is not trading on the blockchain. So I don't know. I kind of think Bitcoin volatility goes a little bit lower, and that's great for investors who don't like volatility. But for those who are expecting these 2x, 3x, 4x, they may need to go down the quality chain in digital assets to find that kind of action.
So what I'm hearing is it's unlikely.
It's a long kind of way of not answering your
A
question.
long shot, according to Andy Bear.
It would be an unexpected. It would take an unexpected market event, given Bitcoin's volatility, to get to 200 by 200,000 by the end of the, or 200 for that matter. So we'll have to see. But it's holding 100, which is, I think, psychologically very important. It feels kind of like if you're an OG and you've decided it's time to move on, you're not going to sell for less than 100. So it feels like that's where we have a little bit of support there. Previous support felt like it was around 110. So let's see where we are by the end of the week.
All right. If you are just joining us, we are at Ripple Swell in New York City. This is an invite-only event, so we are bringing you some conversations with some of the top speakers here today and tomorrow. Our next guest joins us now, the CEO of Schumann Financial, Martin Branco. Hello.
Hi, great to be here.
Great to have you here. I know you flew in yesterday. You're flying out tomorrow. So you really made the trip for this event. Talk to me about why it was important for you to have a presence here at Ripple Swell.
For us, Ripple is a really critical partner. We think it's actually great, critical part of the crypto infrastructure, especially as financial services are now moving on chain. And Ripple has been here since the beginning, so to speak. They were always designed to be there for that. They were not the, let's destroy and replace the financial system, but let's actually move financial system on this new chain. And so we've been working with them quite closely in what we're doing, which is, in fact, moving euro-denominated financial services on chain.
Now, I know last year Europe was launched. That is the euro-denominated stablecoin under MiCA.
Correct.
Why are you looking nervous here?
Am I?
So it was launched under MiCA. Andy and I have been talking a lot at the desk about regulation, with a focus here on regulation in the United States. Curious to hear your perspective, with the MiCA framework being put into place. If you feel like MiCA puts Europe ahead or behind the United States, is the United States catching up? Does it even matter?
Yeah.
Should we even be thinking about this?
Yeah. Look, I think the MiCA was a game changer when it was introduced, because at the time there was no regulatory clarity in the US when it came to crypto, let alone stablecoins. And MiCA did that. It basically set up a very clear regulatory framework, which actually puts stablecoin on par with regular money. So if you issue a stablecoin nowadays in Europe, it's considered as official regular money, and it's regulated that way. So that was a great way of getting Europe ahead in this domain. But I feel that with the Genius Act, US has more or less caught up. So I don't think that advantage is really there anymore.
The digital asset community has had to, if they want to keep their value on chain, it's been pretty much US dollars or risk assets or nothing.
Yeah.
Do you think that the MiCA framework has been critical in enabling, right? We had USDC and Tether long before we had the Genius Act. Is this really the kind of catalyst for euro-denominated stablecoins or value retention to move forward?
It is one of the catalysts, right? And I think this is why we actually launched Schumann and Europe, because if you look at the traditional financial services, the whole world doesn't operate on the dollar. There's this place called Europe. It happens to have 500 million people roughly living in it.
Look, we're in New York City. We don't even
I know.
this thing called the rest of America.
This is why this is precisely why I'm explaining this, right? And it also happens to be in nominal terms more or less the same GDP size as the US.
Right.
And we do not operate on the dollar. Like, people don't think in dollar terms. We all think in the euro terms. And so if you actually really want to move financial services on-chain, if you really want to kind of catalyze this revolution, you do need to have the fundamental currency in a tokenized version, which is a stablecoin. So this is why we decided to basically build a proper institutional strength, so to speak, euro stablecoin that can eventually be on par with the dollar stablecoins in the same way as euros are on par with the dollar. Meaning, of course, much higher proportion of financial services globally is denominated in dollars. But when you look at the euro-denominated financial services, it's still about a third of the dollar-denominated services. So we're talking about a really, really big chunk of global finance.
For payments and for value storage, obviously this is a need that needs to be filled at scale. I also think about trading, right? The trading, a lot of people hold stable coins because that's where liquidity exists for traded assets and where collateral can be left for perpetuals and other derivatives. What do you think, looking ahead 1 or 2 years, maybe not 5, but 1 or 2, what do you see the path for traders who feel that the euro is their local currency or is their home currency? Are they going to flip out of euro-denominated into dollar-denominated to trade or to post collateral, or do you foresee those things really, euro stepping into those functions as well?
I would say partially, right? Especially for collateral. I mean, the reason why dollar stablecoins are dominating the crypto trading is because crypto trading has been historically denominated in the dollars. Just like, for example, trading of oil, even in Europe, you actually don't buy and sell it in euros, it's denominated in the dollars. Nevertheless, indeed, there's a lot of largest global traders are actually European-based. A lot of the the actual investors in these trading houses are European. So it does make sense for at least a part of it to be actually denominated in Europe, and particularly when it comes to collateral, and particularly in today's world where there's quite a lot of volatility, including in the FX markets, right? If you just look at where the dollar was beginning of the year, where it is now, you would have made a good 10% return in something very stable if you actually have held your reserves in euro stablecoins rather than dollar stablecoins.
I'm curious to get your perspective on the digital euro. If a digital euro comes into play, what does that mean for your euro-based stablecoins?
The key word that you said there is if. So I think it's a big if. I don't think it's really a threat to euro stablecoins, simply because even the digital euro, if it ever happens, this is not a policy. It's a technology product. And governments are notoriously bad at running technology products, right? So if actually Europe is to catch up with the US, or euro rather, with the dollar in crypto, in blockchain, in tokenized financial services, it's going to happen through privately issued stablecoins. It's not going to happen through the digital euro. So there might be some role for the digital euro, but I don't think it will be really the dominant aspect of this transition.
There's been a lot of movement towards tokenizing things so that they can be traded on chain, and I guess maybe I have missed it. It's entirely possible, but there hasn't been a lot of tokenized FX trading, and I think, do you think about one of those as a potential for your euro-based stable?
100%. We actually just launched a product, FX-based product, where if you give me USDC, less than 15 minutes later, I will give you euros in your bank account. So this is something quite unheard of still, I think, in traditional finance, where to go from dollar and euro, vice versa, if it's a cross-border transfer, it easily takes 2-3 days.
Right.
Even in crypto right now, normally people will settle you in T+1. We can do this in 15 minutes. So this actually shows you if it's a well-designed euro stablecoin with full integration into traditional financial services, including banking, you can do very, very powerful stuff, like actually even sending euro fiat from a European bank account, and a few minutes later receive dollars in your US dollar bank account. And in fact, as I said, this is what we've just launched. So it's virtually free and it's virtually instant, much, much cheaper than going through traditional finance.
Now, if you're doing that as a forward market, right, what yield curve, I mean, in other words, should these stable coins that each reflect a fiat currency in their forwards, in their derivatives, reflect the yield curves of the of the underlying currencies or of the stable coins? And how do you see that market evolving when it turns more into hedging and speculation of FX?
I think it eventually will go that way, right? Because basically the euro stable coins and regulator dollar stable coin will become de facto equivalent of the fiat dollar or fiat euro. So I think they will behave just exactly as they do with the fiat euro. And again, same thing for the Euro P. I mean, effectively, if you keep a balance in Euro P now, because we can settle you in and out of fiat into the stable coin instantly, or like in a matter of seconds, maximum a couple of minutes, it just basically means that your euro stable coin suddenly becomes de facto equivalent of holding fiat.
I'm sure you would hope that all your competitors wither and go away, but how much capacity is there for multiple different euro stable coins, and what's the happy place for the market?
I think there will be a couple of winners, especially if you look at the size of the stablecoin markets, it's predicted to be trillion plus in effectively a few years. Again, if you look at the composition of traditional finance, you would assume that out of that, probably at least 200, 300 billion would be euro stablecoins. So it probably creates a space for a couple of them. I think we'll also end up, just like with dollar stablecoins, a lot of banks will issue their de facto stablecoins, but they will be just used within their own ecosystem internally. They'll be fairly small, and the real winners will be just a couple.
Why is XRP Ledger the right infrastructure for you to be building this on top of?
Yeah, as I mentioned before, look, it's a compliance-first chain. They've always been compliance-first chain, so it's very important when you're regulated stablecoin, because effectively, you're being treated. We're regulated by the French central bank, just like any other commercial bank in France. So that's one. And the other thing is, as I said, it's a battle-tested chain. It's cheap, it's fast, and the entire team behind it really, from kind of day one, have been thinking about how do we build a chain that's suitable and suited for traditional financial services and moving them on chain, which is exactly what we're trying to do with our euro stablecoin at Schumann Financial.
Martin, thank you so much for joining us at the desk. It was a pleasure.
Likewise, pleasure was all mine. Thank you.
That was the CEO of Schumann Financial, Martin Branco. We are going to take a quick break. We'll be right back.
Crypto became my bridge to connect with people. My name is Swell. I interview global leaders in the crypto and entrepreneurial space via my channel, and I share that knowledge, resources, and insight with my following. Underserved communities, they're not as exposed to certain things. A lot of them don't even have the technology to get in the space. So I made it my personal mission to help people be informed on all of the amazing technology behind cryptocurrencies. There's a lot of people who don't have a bank account, don't have good credit. So with crypto, we're able to see a gateway for these people to build assets, earn income, and get that exposure and knowledge. We all deserve a chance at learning. Never put yourself down about not having the proper tools. Just start. You'll never know where you'll end up. The future is crypto. It's digital and it's here to stay.
Hello and welcome back to CoinDesk Live. We are coming to you from Ripple Swell in New York City. This is a two-day invite-only event where some of the most influential voices in crypto, TradFi, and policy have gathered. Our next guest is the co-founder of Palisade, an institutional-grade platform that provides custody, walled infrastructure, and risk management tools. Manthan Dave joins us now. Hello.
Hello.
How are you doing?
Good to be here.
Good to have you here. I think some congratulations are in order. We learned yesterday that Palisade has been acquired by Ripple. Talk to us about how this acquisition takes Palisade to the next level, helps you realize your vision.
Yeah, it's been quite a journey for us since starting the company in 2022. We are a digital asset custody platform focused more on wallets and providing wallet as a service. What we're really looking forward to with this acquisition is that we'll get the boost that we need in order to reach more markets and to be able to provide a technology that is able to better adapt to the growing needs in the crypto space. One of the key things that we've kind of faced is around our reach in some of the wider markets. Ripple has very deep reaches into the institutional and on the market side of the sort of space. And what we're really hoping is that through this acquisition, we'll be able to not only get more deeper into that, but also provide better product and being able to sort of cater to a wide range of use cases.
What's your vision for the future of wallets? Are we going to see a consolidation? It feels like there are a lot of wallets all offering slightly different things to slightly different customer. What does that look like as the wallet space gets more mature?
Yeah, the wallet space has gone through a tremendous journey. If you look at like since 2017, 2016, even before that actually, it was just all about just hardware wallets to then MPC technology and so multi-sig technologies. The ultimate kind of goal for Palisade is to provide wallet technology for every problem that it can solve. So currently we provide a mix of wallets from HSM to MPC, and also we support multi-sig. And we're really all about not saying that this is the main technology and is the be-all, end-all, but we're more about how do we provide the right technologies that can address the right problem and can solve that problem for that particular use case today. And then how do we also make it so that if in future that problem changes or there's a new problem, the technology is able to constantly adapt and evolve over time. So the future of wallet technology is really, I think, we'll see some consolidation in the space, but really what we're going to see is just better and better technologies emerge that are going to be more adaptable and more sort of like flexible. Take account abstraction as an example. When account abstraction came out on the Ethereum ledger, it solved a lot of the usability problems that some of the hardware wallets have been sort of like kind of having, where if a user forgets their password to their wallet, then it's kind of useless. Account abstraction provides alternate ways of kind of handling that. And we're just going to see more and more of that. Like, it's going to be less about the kind of purist approach that, like, hardware wallets are the best, but it's going to be more about, okay, what's more practical for a day-to-day user.
Who's your typical user right now? And actually, after this acquisition, how do you exchange your kind of user persona to evolve? Yeah,
so our target market today is around issuers and sort of payment companies primarily. So a typical user of Palisade is a company that's trying to process payments on chain, or is providing onboarding into crypto, or offboarding, or exchange services, or services sort of related to payroll processing, treasury management. With the Ripple acquisition, it doesn't change that, but it will bring more range of customers and sort of use cases to Palisade. Our technology has been super flexible in the sense that the online platform can adapt and change to lots of different use cases. And that's really been the kind of like pillar of kind of why this acquisition makes a lot of sense, because Ripple has a lot of use cases beyond just simple payments and sort of like invoicing and sort of payroll management. So what we're really looking forward to as part of this is that we'll be able to unlock the wider range of customers. In the payment specifically, I mean, it's as deep as you go. Like, there are like so many companies and so many different use cases that we cater today. But with the power of Ripple, we'll be able to kind of serve them better.
Go on, please.
You know, we've talked a little bit about the XRP Army today. We've talked about the community here at the event. I know that you were a software developer at Ripple before becoming the co-founder of Palisade. Talk to me about that community feeling from within Ripple. What is it that keeps the builders within the ecosystem?
I think there are several points. So one is the philosophy, which for XRP Ledger has always been the provide the right tool for the right job. If you look at, in contrast to like Ethereum, which is a very open platform where anyone can build a smart contract, versus XRP Ledger, where you have DEX that's kind of built into it. When we talk to customers and like, we don't really vouch for like one or the other, but we say, what's your use case? Like, it becomes quite evident that people view smart contract risk as quite a big risk from their perspective. So that's kind of one kind of thing which always brought us back to XRP Ledger and kind of always brought us back to Ripple. But another thing is also that unlike most of the kind of players in the space who look at blockchain as a replacement for financial system, so that Ripple always looks at it as like a way to work with the existing players to kind of get them on board or to solve real problems, which is really the crux of this, right? There are a lot of platforms and a lot of like DeFi products out there But when you really drill down to like what is a real world use case, like why is someone on this, right? Like what's going to bring a bank that's like currently banking on normal money to use like stablecoins suddenly? Like what's the appeal for them? That's what Ripple's driving, and that, like that's what's kind of attractive to us. For the wider space, like XRP Ledger community, everyone's really focused on sort of building use cases. They're less focused on sort of what you might see in some of the other ecosystems, which are around incentives and kind of like grants or sort of being able to make money via staking. Like Ripple XRP Ledger doesn't have staking. There's no like, so that's kind of quite attractive from a builder perspective, that everybody that's there is not there to take a cut from staking or by running nodes, or like they're more there because they see value in the platform and they see value in the ecosystem, and they're effectively addressing a real problem.
I love Jen's original question about what do you see the future of wallets, and the word wallet even is a kind of a weird skeuomorphism, right?
Yeah.
Convenient and people are comfortable enough with it. But you know, the way you're talking about things, the idea of the wallet, the concept of the wallet and the use cases could be abstracted away into a series of processes. So, you know, think about all the way from retail all to the institutional applications you're talking about. Will we be saying wallet 3 or 4 years from now, or will it be abstracted away and people will look back and say, oh yeah, we used to call those wallets?
Maybe not. I mean, we have a product actually that puts a wallet into passkeys that effectively puts what we call wallet in different forms.
Yeah.
And that's really like, I think, like to your point, right? Like, wallet is a term that was brought in to name this thing, which is in crypto. But if you look at like a bank account, like no one calls their account a wallet, like, right? And yet people hold assets and kind of funds in the various forms, in the form of a credit card, or in form of an account at a bank, or in form of like a brokerage account, or like, you know, different in the sort of different places. So it's not really, yeah. I mean, I think it's very likely that like, you know, fast forward 20 years, like people are going to use the wallet less. And maybe it will have either a new form, or it's going to go back to the older terminology, which is like an account, or not even that. Like, it would just be like, well, my assets are here.
Fantastic. That's fun in the meantime, though, right?
Yeah.
I think, you know, applying these fun kind of easy terms to get things going, same as in any other user interface for technology, right?
Yes. Yeah.
It is also funny that it's reached all the way from retail use and adoption there, all the way to the use cases that you're talking about. Is the current state of play for built for the job that you're talking about, you know, do you see huge technological innovations happening to raise the bar for security or for flexibility, or are we kind of there yet and you just need to build out and find new users? What's the emphasis?
I think it's a little bit of both, but more so in terms of reframing some of the way some of the kind of
Behaviors
products and behaviors that are there at the moment. Technology, there's also a lot of work there as well. Like, I mean, like post-quantum is like quite a big threat, like at the moment to like crypto. Not many blockchains support it. I think like larger banks, like institutional players, are now working towards that. Like, I know there are a few institutional banks who have post-quantum. They have blockchains that are private to them that support post-quantum cryptography, but there's a lot of like work there to be done. So technology is kind of one thing which is going to keep on kind of like building upon itself. But really, I think a lot of work is around like just trying to understand those behaviors and trying to like put them in a new context, and really trying to see not necessarily like how do we take this thing and put it on the blockchain, but more about how does blockchain accelerate this solution, or sort of remove barriers and like and make things easier, and that's really the core emphasis, which is what like we in Ripple do really well, I think, which is more so around like how can blockchain help you, rather than how can we incentivize you put this thing on the blockchain and then like that's the job done and then next.
Manthan, thanks so much for joining us at the desk. It was a pleasure, and congratulations again on the acquisition.
Thank you so much. Appreciate it.
That was Palisade co-founder Manthan Dave. We are going to take a quick break. We'll be right back.
I am a mother. I'm a wife. I am a business owner. I'm Chrissy, and this is my story. caregiver is a huge part of what I do for my daughter who has diagnosed disability. Crypto has made my life easier, especially with the medical issues. Crypto actually offers you access 24 hours a day. I mean, you can do it at 2 o'clock on Saturday night if you need access to something. Because caregiving, you could be doing something all day and then forget, oh my gosh, the bank is closed, or oh, the market closed. It helped me be more open to the possibilities of crypto and understanding how everybody has access. It's almost like its own little lifeline because it gives me that freedom. I feel that crypto has helped to give me that intimate time that I need with my children and making sure that I'm present. And that has been such a life changer for me.
It's happening right now. It's happening to banking, and it's happening with Ripple. Blockchain, crypto, customers and suppliers are paying with it and making real-time settlements around the world. So it's happening to bonds, currency, markets, almost anything. Because if change is happening in finance, then it's happening everywhere. And it's happening with Ripple.
Welcome back to CoinDesk Live. We are coming to you from Ripple Swell. Now, last month, Ripple made a significant expansion into the multi-trillion-dollar corporate treasury market through its $1 billion acquisition of G Treasury. Please welcome the CEO of G Treasury, Renat Veriki, to the desk. Hello.
Hi, how are you?
I'm doing well, thanks. How's the event going so far?
Amazing, amazing.
Exciting times for you guys. I think people need to get a sense of what G Treasury did and why it was, let's just set the stage here. The XRP Army knows, but many others don't.
Yeah, so we are a software company that automates the treasury function. So think about us as being the control panel that a CFO or treasurer uses to manage their treasury function within large corporates.
And so that software right now is applying to what kind of assets, what kind of customers have you been serving as, to what degree of that is digital versus traditional treasury?
Yeah, so currently I would say the bulk of it is traditional, but we serve clients like American Airlines, Subway, Hartford Insurance, and we do that on a global basis. So all the regions we operate in. What is happening is some of that change is starting to happen, particularly in the last 6 months around the digital asset space.
And that function, that dashboard is going to be everything from a little mini balance sheet management, assets, liabilities, and duration management, and things like this. Short and long-term financing. Are we going down the right path? This is what that dashboard has on it.
Absolutely, and it starts with visibility for our clients, right? Where is their cash? They typically have a complex banking network. Where does it sit? How do I make it related to my business? Then how do I project it? Then how do I move it? And then how do I see my debt sheet, and how does it all intermingle? All of that within one panel is what's happening.
So then you see Ripple coming in, and they make a prime services acquisition, and now they've acquired your company to have not only, I think, the software, but the access and the brain share. This is looking very much more and more like a very diversified financial services company. How has it been so far? And what's the food like? And
food is exceptional, by the way. Yes. So it's been a whirlwind. I signed the deal actually flying over Australia and talked to our customers there. Right. It's an explosion of excitement. Mostly right now we're in the 8th stage of education, right? A lot of treasurers try to understand not what crypto or stablecoins can do or what they are, but what does it enable them to do? And so this faster pace of money movement will allow for use cases that they've never thought about before.
Right.
Tell us a little bit more about that. I mean, what does this combination with Ripple actually mean for treasurers? Give us an example. You mentioned some companies that everyone knows about, American Airlines being one of them. What does that mean for the treasurer there?
So first off, it means, one, that they can move money faster. I think one of the things that Ripple enables us to do is think about the piece of execution and bringing innovation. So all of a sudden, so we orchestrate 13 trillion of payments on behalf of our clients. Now we will have an option to make a different type of payment. Whether our clients take it or not will depend, but also we manage 250 billion in the accounts that we monitor for our clients. And think about a time where they can now move money instantly and get yield. What we notice about those accounts is on nights and weekends, there's virtually no activity. So imagine a world now where Ripple brings a product that can make that money work. So when we talk about this deal, there's a lot to talk about, but one of the really interesting things is around making the money more active. And I think that benefits not just Ripple and G Treasury and our clients, but the entire ecosystem. All of a sudden, all the banks, everyone gets to participate in that activation of liquidity. And I think that's going to be one of the more interesting use cases that we start to look at.
So clearly, neither you nor your clients want to be yanked into a different world where they're suddenly find themselves in a in an on-chain world. But you've mentioned some quick wins, right?
Yep.
That help cast light on what benefits can happen right away, and then everything else as is, business as usual, happy customers, and then we see where we are in 5 to 10 years.
Yeah, I think for us, one thing that's really important, we have 1,000 clients, all these larger size corporates, and we're going to give them optionality. This is within their banking network that they have today. They pick how they flow the money. We're just going to have another option for them if they so choose. So I think one of the great things about Ripple and the vision is they're patient about the adoption. And I think that's exactly what corporate treasurers want, is the patience, and they can test use cases that they're interested in, and we'll bring those use cases to them.
Everybody has competition. I'm sure you must have, your competitors must have lost some sleep after they saw what happened to your firm. Do you see other things happening with competing firms, or are you the first of many? And what are your thoughts there?
Yeah, back to the night that we announced it. Yeah, it was a nice night. Brad and I talked about.
Pretty good.
How did you celebrate?
I signed it flying over Australia, so it was an odd celebration.
When the plan landed, what did you do? When the plane landed,
I laughed that I got a latte, which is really good in Australia, flat white, so it was early in the morning.
Okay.
But what I would say is the competition is certainly strong, but we're the first in this space. So again, I think what is super exciting for me is the opportunity to gain market share. I think Ripple has a balance sheet that's unrivaled in our space. And then second, bring all this innovation, right? We have a chance, if you're running a company, the opportunity to acquire customers, make them ultra satisfied, and then think about leading in innovation. I mean, there's no more fun than you can have, right? Those things are what Ripple's going to bring to us, and I think we're going to really outpace our market.
I want to talk about that education piece. What kind of questions are treasurers asking after the acquisition? What's the education gap there?
Yeah, I think that's one of the big things we have to do.
Probably had to get on another plane pretty soon after that, right?
I didn't spend a lot of time in Australia.
Right.
But I think that's one of the big things we have to do, right? Not just crypto as an asset class. I think people wonder about its volatility, but it's what we can do with stable coins that we need to educate. So I'll give you an example. I was in Australia, and one of the clients there said, look, I'm too scared about crypto. And then I said, well, what if we could give you a product that moves your money in minutes? Mm-hmm. And he immediately connected that to, I have 2 subsidiaries in Europe that are holding 50 million extra cash because they're worried about their payments in 3 or 5 days of settlement. I could free up 50 million and create yield if you could bring that to me. I'm ready. So it's that education that we're going to really spend a lot of time on.
It sounds like it's really also about abstracting some of that scary language away, right? Not talking about crypto, but talking about the solution, and maybe not even having to explain how the infrastructure works.
You're already ahead of us. I think in some ways this industry, I would say, loves talking about the components. But if you think about banks, they sort of just say, don't worry about it. Push it into our institution and we'll get it to the other side. I think there will be some of that could really help adoption here.
Now there's stable coins and payments, but then of course you don't want to leave any stable coin that's non-yielding sitting anywhere too long, right?
Yep.
So I suppose that at least tokenized yield assets are kind of going to be at least chapter 2, if not last half of chapter 1.
I think Ripple Prime is super exciting. So we have some opportunity, again, on that weekend activity. Let's just take it. We could offer that as a yield mechanism that can basically put money to work that no one in the corporate sort of treasury world is doing because of the speed of execution. And think about what that then means. In the private equity world, this means you get to go to your CEO, your investors, and say, I will generate this cash, which is cash is king in the private equity world. But you could also bring that to the public worlds and say, all of a sudden, treasurers get to have an impact on their business and create yield that never was activated before. And I think that's the part where the education's going to match a little bit of people's willingness to try this.
I'm thinking also about hedging down the road maybe a little bit, right? American Airlines has to hedge fuel prices and other prices. Hartford Insurance, I think you mentioned, I mean, they have to hedge equity prices and rates. Now, they know how to do that. They have good markets to do that, maybe not 7 days a week. Are you going to kill all your clients' weekends?
So, yeah, I had not thought about that problem, actually. I'll tell you what we would do is our goal actually is to start with full automation. So right now we can even do sweeping across accounts. We can do it across institutions, immediately dump that into money market funds. The problem is it's a limiting number because the settlement. So we can automate all that back and forth into their systems, which means they actually get to free up their time to get yield without having to do the work, right? And I think that's really interesting.
Fantastic.
Renat, thanks so much for joining us at the desk, and congratulations on the acquisition. Hopefully you get another latte.
Yeah, thank you.
That was the CEO of G Treasury, Renat Veriki. All right, Andy, we are moving right along. Some incredible conversations we've been having here.
I think, the acquisitions are interesting in how varied they are, all the way from a wallet, which we may not be calling wallets a few years from now, all the way to this treasury software dashboard kind of framework, which is really all the way at the other end, right? But I guess the common theme has been payments, right? And we weren't talking about payments a year ago.
No,
I mean, maybe we were a little bit, but we really hadn't woken up to the Genius Act world and the world that it's okay to talk about stablecoins and to raise capital for businesses that support payments like that. So that's super exciting. I think that that's becoming part of the top of full narrative.
Yeah, I think one of the other narratives, just to build on what you're saying, is, it is a brave new world, but we're just building on what already exists, right? And some of that language is going to be abstracted away, and the next iteration of the financial system will be here. So it's not like everything is getting displaced and everyone is getting displaced. We have some interesting acquisitions happening that are bringing the innovation to companies like American Airlines and Subway, like our last guest was talking
I hope we can keep it fun, though, because a lot of this stuff, once it becomes automated and treasurers, then, it becomes part of the fabric, and we need narratives that people can hang on to.
I think there's still some fun in the space.
I hope so.
I mean, speaking of fun, XRP Army that's watching us at home, should Andy wear a tie tomorrow?
I'm
Feel
leaning.
free to vote in the comment section below.
Let's throw up a poll.
What color tie would you wear?
I don't know. That's a whole other thing. Boy, put me on the spot.
I'm sorry, Andy.
What are you wearing tomorrow? We'll
I'm
coordinate.
not sure. We will coordinate, and you will see us here again tomorrow.
I'll have my people work on it.
I just want to remind everyone, if you're just joining our program, we are coming to you live from Ripple Swell in New York City. This is an invite-only event, so if you're watching at home, you are getting a special look into some of the discussions that are happening here in New York City. I'm Jen Sanasi. This is Andy Baer. We are going to be with you for a little bit longer. We'll also be back again tomorrow, but right now we're going to head on over to the stage and take a listen in to what's happening over there.
We'll start with you, Miles.
Yeah, from our perspective and how our clients use stablecoins at the moment, of course, one of the key use cases is a bridge between TradFi and DeFi. So it really acts as that. Also stablecoins in terms of the programmability, particularly when we think about KYC, KYB, as well as the speed and the cost efficiency.
Just to follow up there for a second, I've spoken to a lot of people who look at stablecoins as really being an unlock for the B2B market, especially as on the supplier side. Is that, as interesting as the consumer side for you?
Absolutely. We serve, as well as individuals, we serve businesses, and we speak to many corporate treasurers at the moment that are very heavily focused on that. So not just like crypto in general as an asset class that they want to bring into their company, but also how do they support, whether it's supplier payments or the different activities. And of course, there's cost pressures in all businesses, and they want to look at how they can streamline and create efficiencies and reduce some of those overheads. So B2B is a big, as you say, unlock at the moment. Yeah.
Great. Martin, you guys have the Euro P, and you are an issuer. Do you look at stablecoins as is it infrastructure, is it product, is it an asset class? How do you define it?
It's in a way all of the above, but fundamentally we think of stablecoins as becoming the most essential core infrastructure of financial services. And the reason for it is that, we all in this room know that financial services are moving on-chain. They will inevitably end up on-chain because it's just a much better technology for moving and storing financial value. And in order to be able to execute and settle these financial services on-chain, you also need an on-chain version of the currency in which they're denominated. And that's effectively a stablecoin. So indeed, right now, of course, the biggest and fastest growing part of those financial services on-chain is payment. And there you can already see how extremely powerful they are. One of the things we have just recently launched is FX swaps into fiat, on-chain, off-chain. So you send us USDC, for example, less than 15 minutes later, you have Euro fiat in your account, vice versa. And we do this so virtually, instantly, and virtually for free.
And Chris, how is LMAX approaching this? Especially, you have an FX background as well. What's most interesting to you?
Yes, I think we're graduating now from experiments and proof of concepts to our clients are demanding enterprise-grade solutions, and that means means a lot of things. It means regulation. It means deep liquidity. It means trusted platforms and systems. Putting all that together, and it does take time, but we're seeing a lot of banks now forming conglomerates to approach this, and we're doing similar. So we're trying to integrate it right the way through our systems to make it as seamless and easy as possible for our clients to trade stables.
Martin, I want to go back to you for a second. I'm interested in, we think about trade, we think about remittances, payments. I'm really interested in the fact that we're still a very small % of money being moved globally, but we're growing in the stablecoin business. How long before we enter a phase where stablecoins are truly representing a significant amount of the money going cross borders?
Well, they are indeed. We're just scratching the surface with stablecoins because historically stablecoins have been almost uniquely used as an instrument for crypto trading and everything related to crypto trading, which if you look at global financial services, it's really tiny. And so obviously the challenge for stablecoins was that the traditional financial services were not yet really being executed on-chain. But I think it's going to be it's already becoming a very natural and I think ever-accelerating process that with this move of the financial services on-chain, the demand is going to explode. It's going to grow exponentially. And again, we see it in payments because this is kind of the obvious use case. Even though it's obvious, it took many, many years for us to get here, and we're still in the early stages. But I think once things really take off, we can speak about it more as FX trading. Just because the traditional financial services market are so much bigger than crypto, right? I mean, if you look at the dollar-euro FX pair in fiat, the daily volume on that is almost an order of magnitude higher than all of the crypto trading of all of the crypto pairs on all of the centralized crypto exchanges, right? And that's just one single traditional finance product. So that just gives you a sense of how big stable coins indeed will become this whole market once this transition of financial services on-chain really fully takes off.
And Miles, as we look at the size of that, the way that Martin was putting that, I feel like settlement and the banking layer is really the one that starts to come into frame as where a lot of this is going to transact. I mean, do you think the banks are ready for that?
Are the banks ready for that? Probably not right now as we sit, but what I would say is there is a lot going on in the background, probably that we don't ordinarily see. When we think about cross-border payments and stablecoins as a use case, in that sense, we tend to picture it as individuals transferring money, or being able to pay for goods and services. But really, and I think, touched on that a little bit, that behind scenes, really, we need to re-knit the fabric of financial services and how we move money between banks and other regulated FIs. And that will take time to change, but it is changing at the moment. And then we'll start to see that filter through to consumers. Yeah.
And so, Chris, you've had a long career in this business. How do we engender more institutional trust in this asset that not so many years ago, people were labeling as suspect?
Yeah, I mean, like if I'm being cheeky and an old TradFi guy, stablecoins in the past maybe was a parallel, shadow, riskier type of and it's definitely coming. I have absolutely no doubt about it, but there's still quite a lot of work to do. We've got maybe stablecoins today are accounting for 1% of cross-border transactions, something like that. The other 99% is trapped in batch files and banking hours, and that will be released once we integrate to the systems and and really demonstrate that trust. That will come with regulation.
Yeah, I think regulation is key here, right? Because look at our euro stablecoin, or for that matter, any regulated stablecoin in Europe. It's now legally considered as de facto official money. So if you're a financial institution, you have no issue touching it if it's properly regulated, because indeed, from a legal perspective, this is regular legal a tender in Europe, which obviously wasn't the case until quite recently, right? So, yeah, you no longer need to worry or even wonder as a financial institution, like, what is this going to do to me, and how is my regulator going to look at me if I start to use this instrument?
Martin, coming back to you for a second, I have the pleasure of being able to interview a lot of different people in the crypto space, but also a lot of people in traditional tech and finance. And one of the things I've noticed on the conversations I have with people who come out of Web 2 and big tech is there's still a healthy skepticism on crypto. But the minute you mention stablecoins, they say, oh, well, that makes sense, right? And I think that's partly because they see the billions of people who can potentially be customers here. What do you think has been the unlock? Because again, as an issuer, you track this. What is the unlock that maybe disarms those who look at crypto as being something to be suspicious of? We all know that's not true, right? But I think that stablecoins have allowed other people to jump in because they can see a use case there. What's your impression?
I think it's a real use case, right? I mean, with respect to the entire crypto community, a lot, if not most of the crypto has been crypto for crypto's sake, right? We have these products or we just, trade between each other, but there's no real fundamental human need other than make more money that was, involved in a lot of crypto. With stable coins, suddenly you have an instrument that's starting to be used for real world, real use cases. Payments is one, but even storing value, right? I mean, again, it's very difficult to see it out of New York, but and even out of Paris, where I'm based, but we're still closer, to places like Africa. If you live in places like Ghana, for that matter, anywhere in Africa, you cannot really save in your local currency, right? Because virtually all of these currencies are inflationary. So it's not even about saving and making an interest, it's just protecting your wealth. Suddenly, with stable coins, you can actually hold balance in a globally accepted currency, which is not only stable, but which is, basically non-inflationary. So I think that's really the thing that is starting to unlock things. Same thing for payments, right? If I tell someone that, well, you can send our euros or vice versa, you need to send dollars from your US bank account and convert them into euros in a European bank account takes you days. With our stablecoin infrastructure we have behind it, and actually with very healthy involvement of Ripple as well, we can do this in a few minutes. So that's kind of, I think this is the killer argument, right? Look, 3 days versus 3 minutes. What is there to talk about?
At dinner last night, I was seated next to someone very deep in a very old TradFi firm who kept saying, right, but what does blockchain do that we can't do in TradFi? And I kind of said what you just mentioned, the idea that in a place like Ghana or Southeast Asia or Latin America, that this is actual financial freedom.
Yeah.
Right? This is why we do what we do. And I think there's something that's very powerful when you're able to talk about that. I think, Miles, you guys just got your...
Welcome back to CoinDesk Live. We are coming to you from Ripple Swell in New York City, where leaders in crypto, blockchain, policy, and payments have come together to drive impact. Our next guest is the president of Ripple, Monica Long. Monica, welcome.
Thank you. Thank you so much for having me and for being here with us.
Thank you for having us at the event. Andy and I have been having some incredible conversations here at the desk. I would love to hear from your perspective. What's the message you're sending at this year's Ripple Swell?
Yes, here we are in New York, financial capital globally, certainly within the U.S. And I think the situation's changed dramatically in the U.S. in 2025 for the crypto industry. And we're here to really signal how the bridge between the world of decentralized finance and the world of traditional finance is really happening. It's tangible. And this morning, we welcomed Adina Friedman, CEO and chair of NASDAQ. And that was really her message. And she backed it up with real tangible proof points of some of the work that she's doing with DTCC and others in the industry to modernize the infrastructure.
It's become clear through the messaging and the acquisitions over the last year about how people should think about Ripple, right? Sometimes for retail people, it's a little bit abstracted away, but diversified financial services company is something that people can get their hands around, and you have a prime broker now, you have a treasury framework provider, you have a wallet provider. How do you handle messaging around all these new kind of limbs that Ripple is growing?
It's a great question, and yes, the company has expanded in a few different directions this year with the acquisitions. And we think of M&A through two key strategies. One is to accelerate our existing product portfolio. So for many years, we played in the world of payments and making payments more efficient, more scalable using blockchain. And we have, in the past few years, really expanded to be the end-to-end digital asset infrastructure provider. So that includes not just the on and off ramps and liquidity, but custody, getting the network right. So we went about acquiring more than 75 licenses around the world so that we can be that partner to a business who's trying to make their cross-border payments more efficient through just one simple integration. Rail, which we announced earlier this year, and then just this week, Palisade, are two examples of acquisitions that are strengthening the core infrastructure and adding missing puzzle pieces. And then the other kind of way we're growing is the second strategy is expanding to new lines of business that really will usher in the next wave of adoption of this technology. So I know you spoke with Renat, CEO of G Treasury earlier. Corporate treasury is a massive opportunity. They are responsible for most of the global money transmission annually. And so that is an opportunity for us to work with the G Treasury team to really co-develop the infrastructure and the next set of solutions that corporates would need to use blockchain. And then similar, Prime also being kind of a new line of business, but very complementary to where digital assets can improve efficiency.
I think let's talk a little bit more about Prime. You rebranded it recently, which is nice. It's just in the family, but it seems it's aiming more towards that kind of institutional trading and money management market that's very hungry for very credible service providers, right? You can't, crypto has shown what happens, actually traditional banks have shown what happens when you have a prime services unit on wobbly legs, right? It will eventually kind of experience trouble. So being on such a firm ocean of liquidity and balance sheet portends well for a business like Ripple Prime. It does feel a little bit different from everything else you mentioned, and so maybe you can expand a little bit on where you'd like to see that go.
Yeah, and you hit the keyword there, or I liked your phrase, ocean of liquidity. Digital asset markets have grown tremendously over the past 10 plus years, but they still are quite small in comparison to the world of capital markets. And so having a business like Prime under our roof, we are a client. So internally, our payments team, we use Prime in order to facilitate liquidity for our customers of payments. But we see it as something that will also underpin more use cases. Adina Friedman spoke this morning, and also Mark Ash, the CEO of Prime. He's talked about how post-trade clearing and settlement could really benefit from higher efficiency of capital mobility. And so those are some of the use cases we're working through, and that's perfect for what a blockchain's suited for.
This event is called Swell, and we were kind of kind of playing around with that because the markets are choppy and there's like
Andy's very good with words, as you can
puns
see.
and wordplay. Yeah.
The little waves that that make your boat unstable are the chop, but the swells are the big waves that if you can navigate them well, you can
poetry over here.
I am looking to point this towards vision and how do you see the horizon? How do you navigate? Whether they're regulatory or market sentiment or any kind of short-term problems, to keep your gaze at the horizon really and try to navigate the swells while avoiding the chop.
I mean, I feel the analogy you drew out has really been the history of the crypto industry and certainly our lived experience at Ripple. We're one of the old guard. This company was founded in 2012. I joined in 2013, so I've been through the chop in the moment, many different time periods of that, but then also these incredible moments of progress. And I do think with more regulatory clarity, that's always been the long pole in the tent, right? Like we've kind of talked about it on stage earlier today. I think financial services gets it. They get where markets could be more efficient, rails could be more efficient, more transparent. So they understand the value that blockchain can bring. The long pole has been, well, what are the regulators going to say? How are they going to view this? And that's just been a huge propeller. I need your help getting the analogy to fit together. It's been the swell that has brought us onto the wave.
You're doing
onto the wave.
You're doing great.
We're there. We got there.
There we go.
That's right. No, we got there. We got there.
I want to pivot a little bit and talk about stablecoins, a huge narrative this year, of course, on the back of the passing of the Genius Act here in the United States. RLUSD is, of course, Ripple's stablecoin, but we also had folks at the desk talking about EuroP today. I know there are other stablecoins building on XRP Ledger.
Yeah.
What's your stablecoin strategy?
Yeah, so from a Ripple payments perspective, the vast majority of our flows are working with RLUSD today, and that was really our motivation for launching a US dollar stablecoin. Of course, DFS regulated, so we want it to be very very credible and very trusted in the market, even by institutions. Some of the examples you're calling out, though, is the original vision for the XRP Ledger was to be a payments blockchain, and hence why it had the first decentralized exchange built into it. And so this idea of bring high quality assets onto the ledger, and stablecoins are a great example of that. And the DEX can be used to facilitate FX, with XRP being a transaction fee currency, also a bridge asset between especially stablecoin pairs, or if we project into the future, other tokenized real world assets. That long tail might not always have liquidity for the asset cross, and so that's where XRP is the bridge.
We have a lot of folks watching who are ardent XRP, enthusiastic XRP army. What kind of message can you tell them about the growth plans and, what's sitting in their wallets right now?
Yeah, I mean, within Ripple, so of course we have a commercial business where we're serving financial institutions with that digital asset infrastructure, and then we also have a team that's purely dedicated to the ledger and continued innovation. I hope people been following, developers been following over the past couple years the amount of new features that we've put up for amendment. Next up is a lending protocol. So there's a lot of investment internally in just expanding the use cases and capabilities, and then also to bring more institutions in their use cases, like stablecoins being a great example, onto XRP Ledger, and we think about that our Ripple team overall, we think about the flywheel effect between utility, trust, and liquidity in XRP, and we put a lot of work into utility.
Monica, we are, I believe, at the end of day one for our CoinDesk Live broadcast. Not the end of the event. Talk to me about what you're looking forward to for the rest of the day and into tomorrow.
Oh, yeah, there's so much still to come. Tomorrow, looking ahead to tomorrow, I would highlight our CEO, Brad Garlinghouse, will take the stage with Patrick Witt from the White House. So I can expect, I don't know that Patrick has any insight into the government shutdown, but I can expect there to be a robust conversation just about the policy outlook. Probably crypto market infrastructure, or the crypto market structure bill would come up. And then also I'm really excited to see our co-founder, Chris Larson, on stage. So he's gonna be there with World Central Kitchen's Jose Andres, talking about using RLUSD and our payments products for aid delivery.
Both Brad Garlinghouse and Patrick Witt will be at the desk. And I heard that Chris Larson doesn't often get out there in the public like some of the other founders and co-founders out there. So it's really special that he'll be on stage.
Yeah, I agree. He's such a visionary, and it's always exciting to hear from him.
Well, we're looking forward to day two as well. Monica, thank you for joining us at the desk.
Thank you. Thanks for having me. Thanks for being here.
That was Ripple President Monica Long. All right, Andy, we are nearing the end of our broadcast, and the XRP Army on YouTube have weighed in on what tie you should wear tomorrow. Someone said a bow tie. I don't know if you have one of those available.
I think unless that's a lot of votes, we're gonna save that for another time.
Steer away from the bow tie.
But thank you,
green for money.
We'll have to see. We'll have to dig deep in the tie drawer, but maybe.
Maybe green. Maybe green for money.
Yeah. Okay. We'll see.
All right. That's what I'm looking forward to. What are you looking forward to tomorrow?
I think we have some fantastic folks coming to the desk. It'll be great to see Brad and Patrick here. I'm gonna bone up for those interviews, but today we heard a lot of good stuff. I think these are high information events that really get a capsule. When I think about XRP holders wanting to really kind of have a quick course into what kind of company and people are underlying the token that they hold, they got some good information today.
High quality guests, high quality conversations. I believe high quality conversations happening out in the room outside of us, amongst the people who are attending, all a signal that the industry, I think, is heading in the right direction. Andy and I look forward to joining you again tomorrow. We'll be here live from Ripple Swell from 9:30 a.m. Eastern Time. We hope you join us again for our broadcast. For Andy Bear, I'm Jen Sanasi. We'll see you tomorrow.